It's 121 on Wall Street. We do check markets all day long at Bloomberg. Stocks fall, bonds rise ahead of the inflation report tomorrow morning. 8:30 a.m. is when that data drops. Complete coverage on Bloomberg Radio and television. S&P right now down 12, a drop of 0.2% to 5190. We've got the Dow down 119, lower now by 0.3%. NASDAQ is lower by 7 points now, a drop there of just under 0.1%. 10-year 4.36% with a 2-year that's yielding 4.73%. Spot gold up $6 the ounce, up by 0.2% now, 23.44 for gold, while West Texas Intermediate crude oil is down 1.4%, 85.26 for a barrel of WTI. West Virginia's treasurer has announced he is restricting 4 financial services firms from providing state banking services because he says they, quote, boycott the fossil fuels industry. Citigroup, TD Bank, Northern Trust, and HSBC Holdings have all been added to a list of companies that State Treasurer Riley Moore's office determined engage in such a boycott based on a review of each institution's environmental, social, and governance policies. Again, recapping, U.S. equities are trading lower right now ahead of the CPI report, an 11-point drop in the S&P 500 index, down now by 0.2%. Balance of power continues, and once again, your hosts, here they are, Kaylee Lines and Joe Matthew.
All right, Charlie Pellet up in New York, thank you so much. I am Kaylee Lines alongside Joe Matthew here in Washington, where we are just now dealing with some breaking news, not from here in the district, but actually from the state of Arizona, a critical swing state in this election cycle. And the state Supreme Court has just ruled that a sweeping abortion ban can take effect. This is a rule or a law from 1864, about 160 years old, near total ban on abortion. It criminalizes abortion by making it a felony punishable by 2 to 5 years in prison for anyone who performs or helps a woman obtain one. So, Joe, taking what is, we know, a hot button issue, one that has shown the ability to galvanize turnout in recent election cycles, including in the midterms in 2022, and now here it is potentially igniting in a crucial swing state.
Yeah, interesting. There is an exception here. That's the life of a woman in this case, codified in 1901 and again in 1913 after Arizona became a state. Look, this is just another reminder for voters that this is going to be an issue that they will have to factor into their decisions in November. And it's where we start our conversation with our panel today. Rick Davis is with us, Bloomberg Politics contributor, of course, longtime Republican strategist, joined by Brad Howard, Democratic strategist, now at the Corcoran Street Group. It's great to have both of you with us. Rick, you, of course, are a veteran of Arizona politics. How much of a concern should this be for Republicans running in that state?
Yeah, I think this is a major concern for all the players in the state. It's not necessarily been a battleground for abortion in the past. This law that you were describing, a Civil War era law, hasn't been on the books really since Roe v. Wade. But once it was overturned by the Dobbs decision, the state had to reconcile its laws. And as the Supreme Court indicated today in Arizona, this law still is on the books and now takes precedent. Arizona had a 15-week ban on abortion prior to that. And the other thing that's happening that actually this just adds incredible amount of fuel to the fire, this decision by the Supreme Court in Arizona, is that there's a referendum that is looks like it's going to wind up on the ballot. They're collecting signatures. They have over 120,000 more signatures than they need today. And they keep going until July. But the group of abortion reproductive right advocates are going to put on a 24-week ban on the ballot. Now, this is going to be a huge fight in Arizona. And the fact that the law has now retreated to a Civil War era law is going to make it even more dynamic in this regard. And this is a state that Joe Biden only won by 0.3% last time around. So anybody who tells you abortion isn't going to be a hot button issue in Arizona this year and may even determine the outcome of the presidential election in that state doesn't understand how tight a margins Arizona has.
Yeah, it's an excellent point, Rick. And of course, it's not just presidential candidates that will be on the ballot. There's a critical Senate race as well in Arizona, Brad. It's Kari Lake, the Republican, versus Ruben Gallego, the Democrat. And Gallego, right on cue, puts out a statement reacting to the Supreme Court ruling saying, here in Arizona, we support a woman's right to an abortion, which is why I'm going to defeat Kari Lake and fight like hell to protect abortion rights once and for all. Does this decision from the court make it more likely that he will do so? He will defeat Kari Lake, or at least it's a lot harder for Kari Lake now?
Absolutely. And in full transparency, I'm a friend of Ruben Gallego, the congressman, and know him well. And absolutely, he's going to take full advantage of this. He's going to bludgeon his opponent time and again with this position. It is smart for him. It's going to consolidate his base. He's been consistent on this issue, and he's been a fighter in the House for reproductive freedoms. He will be in the Senate. There is no equivocation with Ruben Gallego. But also take a step back to the presidential as well. Keep in mind what just happened yesterday. Trump came out and endorsed leaving this up to the states. Thereby, Trump is okay with this policy. He thinks Arizona should decide. Therefore, Arizona now has this as the law of the land, which Trump supports. So it's a reminder that Trump is the reason we are having these draconian laws back to before the Civil War put in place because of Trump's successful efforts to overturn Roe v. Wade, and now his position that each state should decide. So Trump owns this, and absolutely, you're going to see President Biden take advantage of this as well. And to remind voters time and again that Republicans' position on this is way out of touch with modern era and most swing voters.
Brad makes a great point, Rick. I know that you questioned Donald Trump's strategy in making that announcement yesterday. A lot of people pointed to Florida. He didn't even weigh in on his own state. But you could also look at this as a tacit endorsement of every state's abortion policy, couldn't you?
Sure. I mean, this is the kind of thing that just gives a campaign manager fits and starts. You know, they do what they think is right by releasing that. And then literally the next day, one of the key swing states has a Supreme Court that throws this kind of thing over the transom. I mean, it's a disaster. Everybody who can get a microphone in front of Trump's going to ask him, so does this mean you endorse the state of Arizona's Civil War ban and criminalization of abortion? I mean, what does he say, right? And he's like, well, I thought I'd lifted up the states. It's a mess. And Florida, too, another very key state that Democrats are pumping a lot of money into right now because they have an abortion referendum that has come up on their state election cycle this year. So, it's going to be, at least in those two states, a very, very big issue. Whether it trumps things like immigration or the economy, I don't know, but it gives Democrats something to talk about and helps them push their turnout mechanisms on this issue. So I'd say this week advantage Democrats when it comes to Donald Trump's, sort of non-position states' rights thing on abortion. I mean, it looks like a disaster.
And Joe, real quick, if I can jump in, the Florida ballot initiative is interesting because Trump can no longer just say states' rights. Trump is going to have to vote as a private citizen in the ballot box on Florida's abortion question. So at some point, he's going to have to express that opinion.
Yeah, it's a very good point. This was the conversation we were having yesterday has he basically avoided having to address a federal abortion ban policy by releasing the video he did yesterday? Or could this also be something that changes as time goes on, which is definitely a question that the former president will have to grapple with at the same time, of course, that he's running a re-election to campaign. So it's great to have both of you reacting to this breaking news out of Arizona. That's not actually what we intended to talk with you about today, Brad and Rick, because today is the day Congress comes back and there's much to discuss there as well. Rick, how optimistic are you that this will be a productive week or even next week before they go back into recess again for the House? What actually can be accomplished in a short period of time when they've proven time and again that they have a lot of difficulty getting anything over the finish line?
Well, the one thing I'm learning is not to read tea leaves in the House of Representatives anymore. And I'd say that this is sort of baking the cake week, right? They're going to have to figure out what they're going to do, how they're going to tee up some of these initiatives. We've talked about the FISA law needing to be reauthorized. We talked about the Ukraine supplemental. These are really hot button issues, but there are half a dozen other really important issues that need to get dealt with, including new initiatives like online privacy acts that actually have a lot of political saliency out there. So they got to go to work. I mean, this has been the biggest do-nothing Congress in history. They don't have a history of being able to enact laws, and I think that's going to be the real trick is what can they get done in these 2 weeks to at least take something off the table before they take another break.
Well, there's an important committee meeting, Rules Committee, later on today, Brad, where they're going to start marking up, apparently, a FISA renewal bill. Can this actually get done in the next 2 weeks? Could Mike Johnson say, see, I've got something to show for the fact that we came back to Washington?
Look, the one good thing about the House is the majoritarian rule. The Speaker commits to something, and his caucus is behind him. Absolutely, you can fly through things in minutes. So there's still time to get this done. And I think Rules is going to probably put together the structure of what this debate would be, and they'll insert the text, when they reach that agreement, which is a typical way of moving the process forward, even if you don't have text, which is to the rank and file very frustrating because you want to read these bills and have plenty of time to consider them beforehand. But keep in mind that you've also got the motion to vacate the chair that in any minute could disrupt the chamber. There are ways that Speaker Johnson could punt this to when they come back. But he's going to have to address it at some point if Marjorie Taylor Greene does move forward with the motion to vacate. So that's going to impact things. But, usually on issues of national security, it's fairly easy. On these issues, he's got the history of the fact that usually speakers cobble together coalitions from both parties. You don't need all your caucus to support. You look at the NDAA, that's the moderates of both parties, and the extremes on both sides vote no. Similar thing here with FISA. So he's got some, his precedent here to not have to have full Republican support here. He can move forward as long as he's got 218 among the moderates on both parties. So I think this could get done.
Brad, just quickly, we only have 30 seconds left, but should Democrats ask for anything in exchange from Johnson if they were to save him? Should this motion to vacate actually happen other than Ukraine aid, or is that in and of itself enough for the party?
This is my concern with deals like that is you are giving up a one-time thing or an ongoing speakership, right? So if I want to trade apples to apples, right? I want it to be even trade, not a one-time give for 8 more months of governing. If they're going to do that, they need to have structural reforms to the House. So a power sharing agreement, maybe they get control of the agenda for some key committees. Maybe they expand the number of Democrats on rules or E&C or Ways and Means. That would be a fair trade, in my opinion. If you give us the chance to participate in governing, then maybe we'll save you. But if you're not going to give us any say whatsoever in the agenda or the priorities of the House, why would we save you? So I think there's going to that's a fair conversation to have.
All right, Brad Howard, Democratic strategist, and Rick Davis, our Republican strategist today. Thank you both so much for joining us. Now we want to get over to Amy Morris in the 99.1 Newsroom in Washington with world and national news. Hey, Amy.
All right, thank you, Kaylee. The parents of Ethan Crumbley, the convicted shooter of the Oxford High School massacre, both getting 10 to 15 years in prison today for their roles in the shooting. James and Jennifer Crumbley maintained they could not have known what their son was capable of, even after getting warnings from his school. Again, 10 to 15 years for them each. UK Foreign Secretary David Cameron is in Washington, and it's a bid to unlock billions of dollars in aid for Ukraine. He's meeting with Secretary of State Antony Blinken and members of Congress. Cameron also met last night with Donald Trump at his resort in Florida. Secretary of State Antony Blinken doesn't believe Israel will attack Rafah before new talks in Washington.
I don't want to prejudge any these ongoing talks, and I can tell you that again we expect to have a continuation of those talks next week. I don't anticipate any actions being taken before.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long at Bloomberg. Stocks lower ahead of the CPI report tomorrow morning, 8:30 a.m. Wall Street time. S&P right now down 10, 51.92, a drop now of 0.2%. Dow Industrials down 110, a decline there of 0.3%. We've got NASDAQ down 1 point now, little changed. 10-year yield 4.36% with a 2-year that's yielding 4.73%. Gold up 0.4%, 23.46. $1.47 the ounce. West Texas Intermediate crude down 1.3%, $85.28 a barrel. Bitcoin down 3.9% right now, $68,898 on Bitcoin. Boeing deliveries in the first quarter, the lowest since mid-2021. Boeing shares down now by 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash. Balance of Power continues now. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. I am Kaylee Lyons alongside Joe Matthew, broadcasting on Bloomberg Television and Radio live from Washington, where Congress has returned to today. Lawmakers are back on Capitol Hill after a 2-week recess or district work period, and now they are walking the halls once again with a long to-do list in front of them. So joining us now is one of those members of Congress, the Republican from Oklahoma, Congressman Frank Lucas, is with us now live from the Hill. Congressman, thank you so much for joining us and welcome back to Washington. There is a lot that could be done. The question is, will a lot actually be done? What is your understanding of the first order of business? What do you think you'll be voting on first?
I think the FISA issue has to be addressed. I think we have to have a supplemental appropriation to address our allies around the world. That's going to include issues like the bridge collapse in Baltimore. One of my colleagues implies that she might want to give the leadership in the House Republican side a stir. So there's all manner of things going on, and that doesn't even include committee work like financial services efforts dealing with the Securities and Exchange Commission's climate rules. Lots of stuff, guys.
Well, you must be so excited to be back, Congressman. We're excited to have you with us here and a little honest talk about what might or might not happen. That's an interesting thing you just said. If, in fact, we do see action on funding for our allies in hot wars, Ukraine, Israel, and then you've also got Taiwan there, will that also be the vehicle for emergency funding to replace that bridge in Baltimore?
I have to believe that we'll pass one big package. Now, I'm not an appropriator. I'm not in leadership. But I have to believe, based on my experience, we'll have one big package. But who would have ever guessed that the Israeli component of it would cause such rancor amongst the Democrat members of the House? Who would have guessed we would have such a discussion on the Republican side about trying to slow down Putin, the dictator in Russia, from taking over his neighbors? When would have a debate about a major infrastructure piece like the bridge in Baltimore going down? This is just a complicated set of times we're in, guys, but we have to get our work done, and I'm an eternal optimist. So I wouldn't be here.
Right, and you do have a vote even if you aren't an appropriator or in leadership, Congressman, so it raises the question of what it is exactly you would be willing to use that vote for. Mike Johnson has suggested Ukraine aid could come to the floor in potentially a different form than what we saw in the Senate, for perhaps a loan instead of just outright aid, or perhaps using frozen Russian assets. What is it that you would support? What would Ukraine aid need to look like for you for it to get your vote?
Well, I won't make the final decision, but whether it's a loan or outright money, as long as it addresses all our allies around the world, as long as we make sure our friends in Taiwan can purchase the resources they need, as long as we make sure the infrastructure in this country is functioning. You can't have a port of the magnitude of importance as Baltimore stay down for an extended period. That just creates chaos throughout the system, whatever we come up with, but it has to factor all those pieces in. There's not much legislative session left in the 2024 legislative calendar. This is re-election season. This is presidential campaign year. So I would think that management on both sides of the building and both sides of the room will put all this together in whatever the ultimate form is, and it'll come to the floor. And remember, we may organize by Republican caucus and Democrat caucus, but as you noted a moment ago, every member has his or her own vote to cast on behalf of their constituents.
Well, that's right. And you referred to one of your colleagues. I think you might have been referring to the gentlewoman from Georgia earlier. If the Speaker of the House pursues the path that you just outlined, including funding for Ukraine, will it get him fired?
I think that's an issue that we'll have to decide when we get there. Will the trigger be pulled? Will the trigger be pulled, assuming we can pass the bill? What will the Democrats on the other side do? They had a lot of fun by supporting a handful of my colleagues in pitching out Speaker McCarthy. But we're now at a point in time where having fun, political gain, is not in the best interest of ourselves or our allies. They're going to have to be responsible too. The whole body elects the Speaker. The whole body has to make the decision about removing a Speaker.
But as you point out, Congressman, 8 of your Republican conference colleagues did vote to oust McCarthy back in the fall. Do you think there would be 8 or even any more than just one single vote, Marjorie Taylor Greene, who would be willing to cast a vote like that again? Have you heard of anyone who is on her side when it comes to this question around a motion to vacate?
I have not heard of anyone out there rattling the saber to bring his speakership to an end, besides one member.
Okay, that's interesting because we're hearing from a few Democratic members who've said that they might move to help protect the speaker and not have to go through this whole ordeal again. Is that the way this ends? He brings Ukraine funding to the floor, supported by Republicans like yourself and Democrats, in an effort to keep his job if Democrats are standing by?
The speaker has a responsibility to bring the best
to forecast that. Whereas for payrolls, it's 10 basis points, right? So it winds up being a much larger move. But that's up. Like you go back to 2021 and like before you started to see the run up in inflation, and CPI basically didn't move the market. Like people didn't care if it was 0.1, 0.2, or 0.3 back then. Today, it's obviously there's a lot of focus on this particular number, and it's important because obviously we have a Federal Reserve meeting in just 3 weeks or so, and this is one of the data points that's going to be scrutinized in order to determine whether or not the market thinks that the Federal Reserve is going to cut interest rates at some point, and maybe not, right? The market's starting to price for this big possibility that the Fed's on hold the rest of the year.
It's wild. I feel like right now, Ira, maybe this is what happens when we get to the end of a policy or a policy action, if you will, and cycle by the Federal Reserve, but how sensitive the market is. I am curious, when you think about a range, what was it, Jamie Dimon in his letter, what was he talking about, 2 to 8%?
2 to 8% is what the bank is prepared for, he said.
Exactly. What's your range that you are preparing our team for and those who read your research?
Yeah, so we put out a piece actually a couple of months ago talking about the long term, where might Treasury yields be over the next decade. So that 2 to 8 is maybe a little bit wide, but 2 to 6 is probably a reasonable thought. So we're more or less mid-range from where we may ultimately be over the medium term. Clearly, if there's an economic slowdown and we wind up having a recession and inflation starts to dissipate, then we can rally pretty significantly, and you can see 10-year yields, with a 2 handle at some point, and the Fed cutting interest rates down to 2.5%. But just the opposite's true as well, right? So I do think that maybe we've seen the cycle highs, 5%-ish on 10-year yields for this cycle, but I think in future cycles that could probably be extended a little bit. We have much more debt, plus we have probably a more resilient economy than we had certainly during the inter-crisis period.
How quickly could we get to another new cycle in the Fed, especially when you've got people talking about the Fed maybe raising rates?
Yeah, so it's obviously it's tricky because it really depends on your economic forecast. And
True.
So I do think that we're going to have a recession at some point by 2025 or in 2025. It's just going to take a little longer than a lot of the consensus economists have been projecting for a lot of different reasons. It's going to take a lot longer to get profitability down, for people to be able and willing to start firing employees to cut costs, and the integration of artificial intelligence, like all of these things are taking more time than people think. I think we watch too many, we went from watching 1 hour shows to half an hour shows. Now we watch 2-minute YouTube videos, and people just don't have patience and don't realize that things actually take a longer period of time to implement.
Except Bloomberg Business Week, when people on YouTube are watching us.
I was going to say, it's the TikTok
our
Fed.
Entire show.
Isn't it? It's interesting.
Hold on, I want to go back to this idea of 2%, a 2% or a 2 handle in the 10-year, because as soon as you said that, my ears perked up, and I immediately thought about all the folks out there who are on the sidelines saying that mortgages are too high, and that if rates come down, there could be affordability again in housing. That conversation notwithstanding, because of supply and demand issues, Ira, what's your timeline potentially on a 2 handle in the 10-year?
Well, that probably wouldn't be till late 2025, and that would be probably a little bit before the Fed got to their terminal floor rate, which we have kind of a 2.5%. But of course, that's all very long-term forecasting, and there's a lot of changes that could obviously occur because you don't know with certainty about what the economic and inflation environment is going to be. I always laugh when people say that mortgage rates are too high because, look, I got my first mortgage in the 1990s. It was a 7% 10-year, 1-year ARM, right? So,
a 1-year ARM?
Well, no, it was a 10-year fixed with 1 year after that, and then so it was a 30-year amortization. But I could have gotten a 30-year fix for 8% at the time, right? That's why I did the lower one, because it was also a starter house, right? That kind of thing. So these aren't mortgage rates. These are just mortgage rates that haven't been used to the last 15 years or so. They're really not particularly high if you have growth and wage growth that's growing at 4 or 5%. These are kind of normal interest rates in many respects, and I suspect that over time we'll kind of get used to them.
All right, going to leave it there. Great setup for tomorrow's CPI report coming your way at 8:30 a.m. Wall Street time, and we'll be covering it here at Bloomberg. Ira, thank you as always. Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey joining us from BI headquarters in Princeton. So, the inflation report, we know, is the next big focal point for traders.
Yeah, when it comes to things consumers are finding take a bigger and bigger bite out of their paycheck, it actually is power. Nationwide residential electricity inflation outpacing the wider CPI. Prices up 3.6% in February from a year earlier, compared with declines for staples such as eggs and milk, according to the U.S. Bureau of Labor Statistics. And those increases, Carol, in our power bills, they're not expected to go away anytime soon.
Yeah, we're a little bit of a downer here. Yeah. All right, let's get more on his story. Bloomberg News Power and Renewables energy editor Will Wade is joining us here in studio. So, Will, break it down. Why is it, first of all, that power bills seem to be increasing, and it kind of seems to be across the country?
So there's a couple things going on here. First of all, we've got the green energy transition. This is the long-term, enormous plan to replace the power grid with renewables, to get rid of fossil fuels, eventually, no time soon, but it's a long-term trend.
Kind of the great spend, right? To make us greener.
Spend. But we've known about this for years. This is something that utilities have been planning on. Now, let's throw in what we've seen in the last several years: wildfires, hurricanes getting stronger, more extreme. Now we have utilities having to invest billions of dollars to harden their grid, bury power lines out west so they don't get knocked down by storms and cause wildfires, make them more resistant to hurricanes. Again, this is not super new. They've been planning on this. The wrinkle that we're seeing now is, and this is very recent, like in the last 6 to 12 months, is computing demands, especially AI. Wow. All of a sudden, we've got power plants.
Interesting.
Power companies saying, oh my God, we have to build new power plants. That's new. Power demand in the U.S. has been flat for about 20, 25 years. When you take, a certain amount of power off from coal and replace it with solar, that's great. That's a one-for-one switch. Now they realize they've got to install new capacity. That's billions of dollars that's going to be coming up in the next several years that they have not been planning for.
This is so interesting. I wonder, Will, to what extent this also has to do with, or maybe explain to us how this is tied to closure of nuclear power plants in the U.S. over the last few years, and different sources of power.
Well, there was a push to close nuclear power plants, and that was just economic because nuclear power plants are expensive to run. But in the last couple of years, there's been a push to stop that trend. There was one in California they were going to close. They're going to keep it open. There's one in Michigan that they did close. They're going to reopen it. And that's a climate change thing. They're like, oh, we really like that clean, green power, so we're going to go back to nuclear.
What are regulators? Obviously, when it comes to power and utilities, right, there's so much regulatory oversight. So where are regulators on this in terms of, all right, how much can we pass along, or how much are utilities allowed to pass it along to all of us?
Regulators have stepped in. Utilities, it's the same dance we see every year. Utilities go to the regulators and say, can we please have this much money? And here's what we want to spend it on. The regulators kind of have to weigh those balances. Like, that's a good thing. We like that. That's a good idea. Do you need to spend that much money? It's an awful lot of money. They have to weigh that impact on the consumers. So we have seen regulators push back and say, yes, you can raise rates, but not by as much as you were thinking.
Okay, so the regulators on the one side, when it comes to raising rates, what about the government in general on the side of infrastructure spend and the importance of the grid for national safety? The idea that, okay, well, how much of this is our power companies responsible for, and power operators responsible for, versus perhaps the government stepping in and saying, wait a second, we got to subsidize this in some places because it is so expensive.
Well, we're seeing enormous subsidies. That's the Inflation Reduction Act. That's Joe Biden's signature climate legislation. It's called the Inflation Reduction Act, but really it's a climate bill. It's an energy bill. And so there's tons of incentives for all kinds of different projects there. So we're seeing a lot of government action.
I think what's interesting too, and you get into this in your story, Will, is this whole idea that, okay, it's going to cost us a little bit more right now, folks, but if we don't do it, the cost down the road will be even more extreme.
Oh yeah, these are decades-long investments, a lot of these projects, and you have to spend it all up front, and then they last for a very, very long time. So the long-term business case is pretty solid, but the short-term pain is real. You will feel it.
Are we going to feel any relief in the long term, though? If this is indeed a decades-long process.
Sun and wind are free.
Yeah, that will set
so once we build them,
that will set us up for success in the long term. We have to pay on the front end as consumers. Is there any chance we could reap? I'm looking for something here, Will.
There's some chance, yeah. Actually, we just Florida Power and Light, that's a NextEra company. They just announced that they were going to stop a surcharge that they had tacked on to customers' bills because they had a project and they finished it and they finished paying for it. So everybody got a little reduction on their bills. So yes, but I think practically speaking, years down the road, they'll find something else they want to spend money on too.
So it's not going to be like a New Jersey toll road where you pay the toll to build it and then the toll stays around forever, which is like kind of crazy.
I can't promise it won't be.
Well, but that's a good point. I mean, the transition. I mean, at some point, right, you assume that as the build is done and that the cost equation will come in favor, because I know I joke that sun is free and wind is free, but at some point, right, that has got to be that has got to be a benefit.
That is a benefit.
If we look at the model, right?
Yeah, absolutely. Free fuel is a good thing. It's hard to beat free.
Okay, well, over the past couple of years, some costs that have come up when it comes to electricity generation has been an increase in the cost of commodities. So I'm wondering how much of this is about infrastructure and actually stuff that these power companies have to do versus the cost of burning the fuel to provide the electricity, because that's somewhat out of the control of these power companies.
It is indeed. And in fact, most regulated utilities, they have to buy the electricity. So like 2 years ago, when the price of natural gas just went through the roof after Russia invaded Ukraine, power bills were going also through the roof. And I actually wrote a couple of stories that saying, hey, don't blame your utility. It's not really their fault. And everybody wants to blame the utility. Nobody likes their utility.
It's an easy thing to kick.
Yeah, and in fact, we have seen a couple of cases where prices are down a little bit because gas is a lot cheaper now, but some of those declines have been offset by this new spending.
What I do love is you do profile individuals in your story, and ultimately that higher power bill, I mean, it kind of forced him, or he thought about going greener, and he actually did it, which is kind of interesting. And I do think about how this situation will cause all of us to kind of rethink our power situation and maybe go greener if we can. So good stuff. I like going green. Will, thank you. Bloomberg News power and renewable energy editor Will Wade joining us. All right, still ahead, how Iran's better, stealthier drones are remaking global warfare. This story is our Bloomberg Big Take, and it's coming up next.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, The China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, The China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. And you know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? One of y'all's in trouble.
From the world of politics politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day for the Dow, the S&P, and NASDAQ. 14-point drop right now in the S&P 500 index, lower by about 0.3%. Dow Industrials down 134, decline of just about 0.4%, while the NASDAQ Composite Index is down 23 points now, a drop there of just about 0.1%. Spot gold up 0.4%, 23.48 the ounce. 10-year right now at 4.36%. The 2-year 4.74%, and crude West Texas Intermediate down 1.4%, 85.19 a barrel. Traders are making their final bets ahead of tomorrow morning's key inflation report. Boeing deliveries in the first quarter the lowest since mid-2021, highlighting how far the plane maker has to go on its road to recovery from a near catastrophic accident early in January. Right now we've got Boeing shares down by 1.8%. Again, recapping, stocks lower, S&P down 12 now. That is a drop of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, all right, this is one of those stories when our Bloomberg News team basically opens up a window into our world about something we probably don't know about, Tim, but safe to say we definitely should.
Yeah, it's also why it stays Bloomberg Big Take, a story that our editors have deemed a must-read. The reporting gets into how countries from Central Asia to South America are building their own killer technology based on Iranian designs, often with U.S. components. We're talking, Carol, about drones.
Yes, we are. With more, let's bring in Bloomberg News senior investigations writer Sheridan Prasso, who's joining us from our Washington, D.C. bureau. Sheridan, good to have you here with us. A great story, a little bit of a terrifying story, but let's break it down. Tell us exactly what's going on, what Iran is up to.
So when we first started looking at this, we wanted to find out about U.S. technology, kind of heading into, we're hearing about drone manufacturing popping up in places around the world. What we found was actually much bigger in scale and a lot scarier than actually we initially had expected. What we see is Iran actually has its own manufacturing programs proliferating around the world in places like Venezuela, Central Asia, not just the Middle East, where we're seeing quite a lot of increased drone activity, including in the last few years, Syria, Iraq, but now more and more in the Red Sea of Houthis shooting drones, stopping commerce all over. And particularly alarming is the Iranian drone program that is being manufactured in Russia. Russians are now using to attack Ukraine. And that is using about 80% of those components are coming from U.S. and Western companies. It's been a very alarming trend to uncover.
How is Iran and then other countries that are working with Iran, how are they actually able to get these components here?
So in several ways, there are quite a lot of loopholes in the systems that we have currently set up. So as you know, we have sanctions against Iran, and we also have export controls stopping technology going to Russia. But that said, there are quite a lot of ways, evasions all around that. So Iranians have become very expert at creating kind of shell companies and networks all through countries in the Middle East, for example, getting those components through places like potentially Turkey and UAE, and also suppliers in Asia. While most countries do try to have controls to stop Iran's proliferation, it's far less so with places like Russia, and that leaves open the potential for other countries becoming manufacturing bases for Iran's drones. So, for example, we have U.S. export controls on U.S. technology or any components going to Russia, but China does not. And so there's quite a lot of loopholes, quite a lot of ways that technology is getting through places like Hong Kong, which are increasingly a problem. 10, 15 years ago, Hong Kong would have been our closer friends in trying to stop that flow, but no longer. These days, a lot of the components are going directly from manufacturing in Asia and China and other countries directly to Russia and then into Iran's drone manufacturing program. In Russia alone, Iran is helping to manufacture. There's a plan for 6,000 drones to be made there, and we're seeing them starting to turn up on the battlefields in Ukraine.
All right, so Sheridan, what is Iran saying about what it is up to and who it's selling to?
So Iran, of course, is very frustrated by the U.S. and our policies towards it, of course. It is growing its influence. It is creating networks with friendly countries. A lot of those we've seen on the list of rogue actors around the world, but not exclusively. And I think the kind of proliferation of Iran's drone program is actually becoming much more of a threat regionally, but also in far-flung places, too.
Can you talk a little bit about what's happened in recent years that has allowed Iran the capability to do this? I mean, what are the technological advancements that have been made in UAWs in recent years that suddenly these are showing up in conflicts all over the world?
So it's quite amazing. I mean, Iran had previously acquired U.S. technology by shooting it down and making a copycat of it. And then since then, by using drones and kind of executing them in the battlefield, we've seen, for example, a very recent innovation with Iranians traveling to Russia, watching how those drones are working as they're being fired into Ukraine, learning a whole new skill set. For example, the issue of drafting behind another. If you shoot them all in a bunch, you can draft some behind others. Or in the case of the attack on Tower 22 in Jordan that killed 3 U.S. service members in January, what we learned in investigating that further was that the Iranian drone actually was drafting behind a U.S. drone that was landing at the time. And so that's something that they apparently learned from watching the execution of these drones in the Ukrainian battlefield. So it's more and more, they're learning more and more and gaining more knowledge as they go along.
So Sheridan, that's the technology side, which is obviously so important in terms of their prowess at this point. But I do also wonder about the geopolitical developments. To follow on Tim's question, what are the geopolitical developments, such as when the U.S. backed out of the Iran nuclear agreement, that maybe opened a door for Iran to do this?
Yeah, I mean, more and more, I think we're seeing smaller actors and smaller countries basically being able to kind of piggyback on Iran's way of growing its influence in the world. So, for example, in Sudan, what we see is the Sudanese military. We found a case of a drone that had been fired in the Sudanese conflict. We found that the Sudanese military had actually taken Iranian technology, developed it locally, changed some of the parameters of it, and were able to kind of take advantage of that to actually in domestic conflicts. So we're going to see more and more of that. We're seeing more and more countries, or at least a dozen now, I think, that have either requested Iranian technology or help to develop their own drone programs, and that is really remaking the whole nature of warfare.
Sheridan, in a sense, the Iranian drone is sort of turning into a platform for other countries to build upon, no?
Yeah, exactly. And the danger in that is that, it makes a lot of our export controls useless because for example, there is an Iranian drone manufacturing program in Tajikistan. Tajikistan is an ally of the United States and is very useful to us as a friendly country in Central Asia. And yet, its cooperation with Iran means that it is able to acquire Western technology because we don't have any sanctions against that country, and then manufacture drones potentially for Iran that it could re-import back into the country or then sell onward to other conflicts around the world.
Well, and as you write in your story, by helping allies and proxies produce drones on their own turf, a unique approach in the drone industry, Iran's partners gain technology and jobs, as Tim was pointing out with you, while Iran maintains a measure of deniability for how the weapons are used. So is it safe to say it's a strategy on their part?
Absolutely. I mean, Iran's strategy is to gain more and more influence to counter what it believes is the influence of the United States, and it is certainly helping a lot of smaller nations now do that.
Okay, so it brings us to U.S. officials and what U.S. officials think should be done in response, and other allies of the United States should be done in response. How do they keep this under control?
So the U.S. Commerce Department, and particularly there's a part of it called the BIS, they are trying to increase enforcement, put more pressure on U.S. companies not to allow these kind of loopholes, little plugging the dam is what they're trying to do. That is extremely hard when you don't have other states like China, for example, willing to enforce those U.S. export controls. But what the companies that we talk to and whose equipment we're finding on the battlefield, particularly companies like Texas Instruments, Analog Devices, and a few others, they say we are definitely maintaining U.S. export controls. We require our distributors to do that as well. The trouble, though, is that there are so many leaks in the whole system that it's extremely, extremely hard. So they're asking companies to step up enforcement, to really vet any customer that comes who's never been a customer before or who doesn't maybe know all the specifications of the technology that they're acquiring. We really need to actually step up on the sales side.
Yeah, and they're not shy about showing it, right? It was at the Doha show, if you will, air show, just last month, right? And they showed actually one of their drones. It was on display.
Yes, absolutely. They're labeling that drone. It's one of their latest and most technologically advanced drones called, they label it Gaza on the side, in fact.
I always think about, when you guys do this deep dive and you've covered so much information, done a lot of reporting and reporting it out, what's the next angle or what's the next thing that you kind of watch out that might be the next chapter, if you will, or next paragraph in this story?
Oh, that's a good question.
Sorry.
I kind of have to keep that under wraps for now.
Top secret, Carol.
Oh, so it isn't over yet, is it?
It is certainly not over, and we are watching what is happening in a lot of the proliferated countries and how that's definitely spreading and changing warfare elsewhere.
All right, really appreciate it. Thank you so much. Great story, and as we said, it is today's Bloomberg Big Take. Sheridan Prasso, she is Senior Investigations Writer at Bloomberg News, joining us from our Washington, D.C. bureau. You can read more from the Bloomberg Big Take. It's on the Bloomberg terminal, and of course you can find it, Tim, at Bloomberg.com/Big Take.
All right, taking a look at the markets, the NASDAQ 100 down 0.2% as we speak. The S&P 500 lower by 0.4%, while the Dow Jones Industrial Average lower right now by 0.5 percentage point.
All right, well, something we love talking about, and that is airlines. We've got a great guest coming up in the next segment. David Neeleman is the individual behind 5 different commercial airlines. We're talking, of course, JetBlue. We're talking WestJet. We're also talking Breeze. We're going to get his thoughts on flying the friendly skies, kind of what's next, and maybe we'll get him to weigh in on Boeing as well.
In the meantime, checking the latest world and national news, we go to Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Hi, Tim. The Arizona Supreme Court has ruled that the state can enforce its long-dormant law that criminalizes all abortions except when a mother's life is at stake. The case examined whether the state is still subject to a law that actually predates Arizona statehood. The parents of Ethan Crumbley, the convicted shooter of the Oxford High School massacre, each getting 10 to 15 years in prison for their roles in the shooting. Both James and Jennifer Crumbley were convicted of involuntary manslaughter. Steve St. Juliana is the father of victim Hannah and says the Crumbleys spent a lot of time blaming everyone else.
They blame everyone but themselves and make threats of retribution. The facts have already been presented. The jury has found them guilty. Hannah, Madison, Tate, and Justin are the ones who have lost everything, not the defendants.
James and Jennifer Crumbley maintain they could not have known what their son was capable of, even after getting warnings from his school. A New York appeals court judge has rejected another bid by Donald Trump to delay his hush money criminal trial a week before jury selection was set to start. Trump's lawyers had wanted the trial postponed indefinitely while he fights a gag order. Well, the decision means the first of Trump's 4 criminal trials will start as scheduled April 15th. That's this coming Monday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Now, women on average have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving the tools that they need to get back on track.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day for the Dow, the S&P, and NASDAQ. S&P right now lower by 19 points at 51.82 for the NASDAQ. For the S&P, that is a drop right now of 0.4%. So again, the S&P at 51.82. NASDAQ is down 40. The NASDAQ Composite Index down 0.3%. Dow Industrials down 181 now, a decline there of 0.5%. 10-year 4.36. 6% with a 2-year that's now yielding 4.74%. Gold up $10 the ounce to $23.49. That is a gain of 0.4%. And West Texas Intermediate crude oil down 1.4%, 85.20 for a barrel of WTI. Bitcoin down now by 4%, 68,823 on Bitcoin. Best Buy is tapping artificial intelligence to speed up and reduce the number of in-home visits, part of the company's efforts to use the technology to streamline operations. On a down day for stocks, Best Buy up now by 2.9%. Again, recapping, stocks lower, S&P right now down 20, lower by 0.4%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching, of course, Bloomberg Business Week. Top of mind for us, first of all, quick news. Boeing deliveries in the first quarter dipping to the lowest since mid-2021, highlighting how far the plane maker has to go on its road to recovery from that near catastrophic accident early in January. So no doubt, Tim, major airlines are watching for what comes next from Boeing.
Well, when it comes to what is actually happening in the space, it makes sense to keep a watch on our next guest, who's well known in the commercial airline industry, having founded 5 airlines, including JetBlue, WestJet, and the latest, Breeze Airways. With us now is the founder and CEO of Breeze, David Nealman, with us from Providence, Rhode Island. David, good to have you back with us. How are you?
Good. It's been a long day, but productive day here.
Hey, this is not your first rodeo, as they say, but your newest airline, Breeze, turning 3 years old in May. Give us an update on expansion. Give us an update on growth here.
You said it was a productive day, so why was it productive?
Well, I think a lot of talking about our new credit card, a lot of press interviews, but I think the biggest news that we have for today is that we actually made our first profit. We made a profit in March, and we expect to be profitable for the year. And this is in a year where some of the ULCCs are really struggling, and I'm just really proud of our team. We've really carved out a really great niche where people love flying on Breeze. They love the airplanes, the service, the markets we fly, the nonstop. We have almost 200 routes, and 90% of them we have no nonstop competition, but they're routes that people really love to fly. And so that's really the most important thing for us is profitability and continuing to grow and continuing to find great new markets and maturing the markets that we have today.
Well,
Providence. Let me just give you an example. Providence, where I'm here, where it's top of mind. We have 20 destinations we serve from Providence. We have more destinations from Providence than any other airline. And, we're flying Providence to LAX, for example, Providence to Denver, Providence to, Florida, of course, to Raleigh, Durham, to, Mid-Atlantic, all over the place, 20 different places. And people in Providence love it. They don't want to schlep all the way up to Boston and deal with traffic and all that kind of stuff when they can fly out of their hometown airport.
So talk to us a little bit about fares holding up in this class. I mean, it feels like there are a lot of budget seats in the market. I mean, talk to us a little bit about fares and pricing and summer demand, how you're starting to see that shape up.
Well, it's good. I mean, we had a good first quarter. It was interesting. We did more revenue in March than we did the whole first quarter of last year. Kind of shows you our growth. I guess that's 300% or more.
Yeah.
April looks good. May is May. It's a bit of a transition month where we move a lot of our north-south flying to east-west. We're starting to fly San Diego for the first time, going from Norfolk, which is a huge Navy base, to San Diego, for example. So, May looks pretty good. And then June, summer looks strong and, holding our projections for a profitable year. So, it's interesting because we have kind of a base fare that's, kind of like a basic economy like everybody else has. And then the jump ups where you go from nice to nicest to nicer to nicest, where you get into a first class seat, isn't that bad, and people love it. They see the upgrade. It doesn't feel like nickel and diming because we're actually giving you something of value, including free internet, and so it's working really well. It's a really good model.
Hey, David, I'm interested in the fleet. Airbus A220s, Embraer 190s, and 195s. How are you able to survive with such a small airplane when it seems like everybody else is increasing the size of the planes that they're using to offset those higher pilot salaries?
That's a great question. It's a really great question. So, The Embraers we use primarily for charters. We do have a little bit of scheduled service with them, and they're going away by the end of this year, and it'll be all 220s. The 190s, in the month of March, we did almost 600 charters that we flew, for NCAA, March Madness, and all of that. So we use those planes primarily for that operation, and our pilots and flight crews do a great job. Now, the 220, you're right. I mean, pilot salaries have gone up, and fortunately, the pilot shortage situation in the U.S. has really gotten better, much better. With pilots getting ready to be laid off at some airlines, and a lot of airlines not hiring, and a lot of that's because of Boeing deliveries. But because the 220 is so efficient on fuel burn and maintenance costs, we only have 137 seats, and our trip cost, that's our being able to fly from A to B, we believe is about 20% lower, 15 to 20% lower than a 320. And a lot of our competitors fly A320s, be it Spirit or Frontier or Allegiant or JetBlue. So we can fly for 20% lower, and that just opens up an exponential amount of routes that we can fly because we have a lower trip cost. Because the plane is new and it's efficient and has these long ranges, so we can do these long, thin routes as well. So, what Spirit's, I think, is really struggling, trying to figure out, what do I do with a 240-seat airplane? I got to fly where everybody else is, and everybody else is not being kind of late to them. Where 80% of their routes they have nonstop competition, 90% of our routes we have no nonstop competition.
David, you've used Airbus planes a lot in your timeline and creation of 5 different carriers, if you will. And you had the Airbus 320s, right? A big part of JetBlue back then. I'm just curious what you make of what's going on with Boeing, in trouble again, if you will. And, it's a duopoly, right? It's either Airbus or Boeing at this point. But I'm just curious how you were thinking about Boeing and its future here. And why don't you choose more Boeings?
Well,
is it just size
it was interesting because my first airline, Morris Air, had Boeings, and I love Boeing, and I, went up to Boeing and was fully intent on buying 737s for JetBlue. We couldn't come to an agreement, so I went and met with Airbus. Airbus just sold me that they had a better product, a better airplane, our customers would love it more, fly-by-wire, just so many other advantages, better fuel burn. And it was just a newer technology. It was a newer technology airplane. So I picked Airbus at that time. Now, the reason I picked it wasn't because of safety. It was just because it was a better airplane for us, and it was a better airplane for our customers. I fly 737s on a weekly basis. They just got off a United 737 last week. I feel 100% safe. I have total confidence in Boeing. Obviously, they're going through a rough patch here, but the safety record in the United States for all commercial carriers is unbelievable. If you look back, it's hard to find the last major accident by a Boeing airplane, in the United States, and it's really difficult. So, my heart goes out to Boeing. I know they're going through it. I know this will make them a better company, and I expect them to come out of it stronger than ever.
Hey, David, we only have about 30 seconds left, but I got a question from a viewer who wants to know if you're going to bring back flights between Los Angeles and Westchester anytime soon.
You're squinting.
That's a good question. Westchester's a slotted airport, and so we're bidding for some slots actually today, and haven't heard if we got some, but if we do, that's certainly on our list.
Okay, some news. Bidding for some slots at Westchester Airport today. So come back and let us know how that turns out, and certainly I know that many of our viewers who fly out of the New York City area looking for more flights out of Westchester.
Kind of love these hops that you can use in these between kind of shorter destinations, if you will. It makes a lot of sense. Founder and CEO of Breeze Airways, so well known in the airline industry, David Neeleman, our thanks to you. And one more thing coming up, the hot new hotel room perk. Well, after you get on a plane, you go to the hotel, there's a new perk. You might be surprised. What's coming up next?
the linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Now, your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Boeing deliveries in the first quarter were the lowest since mid-2021, highlighting how far the plane maker has to go on its road to recovery from a near-catastrophic accident early in January. Boeing today down now by 2.1%. The company handed over 29 aircraft in March, a slight improvement from the 27 delivered in each of the first 2 months of the year, for a total of 83 in the quarter. Carnival Corp has listed for sale its sprawling headquarters on the outskirts of Miami, seeking to cash in on real estate that the cruise giant has owned for roughly 3 decades. Analysts at Robert W. Baird say Tesla may be heading for another vehicle sales decline this quarter after surprising investors with a drop in the first 3 months of the year. Ben Kello, who rates Tesla stock the equivalent of a buy, says the carmaker faces a tough year-ago comparison in the current period. He estimates the company will deliver 444,510 vehicles in the second quarter, 4.6% fewer than a year ago. Tesla shares, they are up today by 1.5%. GM's Cruise autonomous driving business is preparing to resume testing its robo-taxis with safety drivers in Phoenix, marking an important step in its attempts to restart service after grounding its fleet last year. Official word could come today. GM up by about 0.6%. Norfolk Southern says it will pay $600 million to settle a proposed class action lawsuit targeting the rail company over the 2023 train derailment in Ohio that spilled more than 1 million gallons of toxic chemicals and sickened residents. Those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week. Let's get a check on the latest world and national news. For that, we go to Amy Morris in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Amy.
Hi, Tim. The Arizona Supreme Court has ruled that the state can enforce an old law criminalizing all abortions except when a mother's life is at stake. Arizona's Democratic Attorney General has said she will not enforce the law, and neither will Democratic Governor Katie Hobbs, who calls the ruling draconian.
We are 14 days away from this extreme ban coming back to life. It must be repealed immediately.
Doctors would be prosecuted under the old law that dates back to 1864, before Arizona was even a state. The parents of the Michigan school shooter were sentenced to 10 to 15 years in prison in an historic case. James and Jennifer Crumbly were convicted of involuntary manslaughter for the 2021 shooting deaths of 4 students by their son. It is the first time in the U.S. that the parents of a child mass shooter have been held responsible. The world has experienced its warmest March on record. The European Union's Climate Change Monitoring Service Deputy Director Samantha Burgess says it's not just air temperatures either. Ocean temperatures are also rising.
A warmer ocean holds less nutrients, which means that it's more challenging for some species to grow there. You also get oxygen minimum zones, which lead to mass fish mortality.
In the past year, the global average temperature was nearly 35 degrees warmer than the average in the 1850s. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Carol and Tim.
All right, Amy Morris, thank you so much. All right, as we get ready to wrap up this hour of Bloomberg Business Week, we do have one more thing, and that is the hot new hotel room perk. This is a story that caught our attention. It's in the Wall Street Journal today.
Okay, so the Journal talks about, Carol, how in this day and age, with hotel rooms getting smaller, travelers are also looking for other stuff to do in a hotel room besides sleep. They're going to work from there and stuff, so they need more room.
Roll out a yoga mat, do some yoga.
Exactly. Increasingly, these hotels, timeshares, condos are turning to Murphy beds.
The Murphy bed, isn't it? It's really funny.
By the way, Murphy beds, anyone who's lived in New York City and has tried to, make their living space bigger has looked into a Murphy bed. Very expensive to have built and installed in your home.
They're super expensive. Yeah. I actually had a family member who had one. It was in her guest room. But it was great because they could use the room for other things, a home office, and then it was just when they had somebody over, just kind of pull out the bed. As the Journal story reports, today's hideaway wall bed isn't the rickety, dust-covered last resort many travelers might expect. This according to hoteliers, designers, and furniture companies. They pitch it as an aesthetic marvel that's also comfortable.
You know who loves Murphy beds?
To the Journal. Who?
Kids.
They do love it.
If a bed comes out of a wall, surprise, you can sleep in this bed. They can't be more excited about that.
Hilton's got a hotel brand motto, is that, I guess? Aimed at, have you stayed there?
I have not.
Okay, well, it's aimed at young professionals. It features traditional layouts, including like a single king-size bed, others with bunk-style beds. In addition, 7 of their current locations also feature rooms with a wall bed as the only sleeping option. They call them flex rooms that can be used alone or connected with an adjoining room for a suite-style layout.
Okay, here's something you might not have known, courtesy of the Wall Street Journal. The Murphy bed is actually named after a California inventor, William Lawrence Murphy, who purportedly invented the bed in the late 19th century so he could host a woman he was courting in his one-room apartment by transforming the space into a parlor.
There you go.
Yeah.
And then you close the bed up when they're in it, because that's pretty cool.
John Tucker weighing in. Listen, you got it. I love the history of these things. All right. Anyway, it's a story in the Wall Street Journal. If you want to read more, you can check it out. You can also find it on the Bloomberg terminal. That's going to do it for this hour of Bloomberg Business Week. John Tucker coming up next, along with Molly Smith. They're going to carry you through here on radio and on YouTube. Of course, coming up next on television is The Close. Stick around, everybody. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg. Top experts. Great questions.
If you thought market volume would pick up now that the eclipse has passed, you might want to keep those glasses on for just a little bit longer. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele. And if CPI doesn't deliver tomorrow, now what? Earnings
I'll just
Friday?
go home for the rest of the week.
Okay. All right, let's get a check-in here on where markets are. So we're trading a little heavy all across the indices. We're off the lows of the session, though the S&P is down by just 0.4%. I want to look under the hood at some of the things because what's really moving is the bond market as well as commodities. So Freeport is up by over 2%. That's a copper play. Copper at the highest level since June of 2022. Let's go down to gold, sitting at yet another record high. Many are still scratching their heads as to why gold continues to move higher, if in theory rates are also going to move higher. Not today, though. The 10-year yield's down 5 basis points. We got bidding all across the curve, despite the fact that 3-year auction came in and was a little bit meh. Not a lot of demand there. I had to offer a lot more yield to bring that demand in. We get the 10-year tomorrow, though, Romaine. That should be quite interesting.
Yeah, Matt, really has been the story for the last few days and weeks, and this is another middling market day, specifically when it comes to the equities. S&P stocks right now, about half of the members in the S&P 500, they are higher on the day. That includes Alphabet, Apple, Moderna, but then about half the S&P stocks are lower on the day, like NVIDIA, Meta, and Royal Caribbean. It all pretty much cancels out. You got a benchmark fractionally lower and still stuck in a tight trading range. That's tightness that, including today, We've seen it move up or down by less than 1% on 61 of the 73 trading sessions that we've had so far this year. And on half those days, 34 to be precise, the S&P rose or fell less than half a percentage point. That's tight, and that's a tightness that we've been dealing with now for the past few days and weeks. Now, the good news is that the S&P is trying to hold that pivot line around 5,200. The bad news, the index still sits about 12% above that 200-day moving average. That's a bad sign, at least historically, because that has been the gap that in the past has preceded significant losses for stocks, like what we saw back in 2011, like what we saw back in 2015, and again in 2018. Furthermore, if you look at the options market, that so-called 25 delta put skew has been inching higher over the last few days, suggesting options traders are coming around to the notion that at least a modest pullback in prices is up ahead. But Chris Harvey at Wells Fargo Securities says there's no reason to be shook. Just yesterday, he put Wall Street's highest year-end target on the S&P, lifting his forecast to 55.35. That's more than 6% higher than where the index trades today. It's a bullish call, Alex, based on what he says is secular optimism.
So let's talk about strategists, because do forecasts actually matter right now?
Yeah.
Particularly look at the jobs number, forecast after forecast after forecast. They all just got them wrong. And it's very similar when it comes to inflation. Now, as you know, overall, CPI has been rising and beating expectations, and that's the point. Beating expectations. There's a great chart from John Authors that just shows how increased CPI is above what analysts are actually estimating. We're surprising to the upside. And you can just see here, this is that 2% line that the Fed's really looking for, and here's where we're sticky. We're staying. We're right there around 3.2%. So, my question is, we're going to look at the forecast, but do they actually mean anything anymore? Because inflation just keeps holding on to that higher level.
Yeah, absolutely. Something we're going to spend a lot of time discussing here on the big show today. Kicking you off to the close this Tuesday afternoon with Michael Remack. He's head of investments for Citi Global Wealth at Work, joining us today in studio too. Michael, great to have you.
Nice to be here.
This has been a week where everyone, I think, is laser focused on inflation and, for that matter, earnings as well. But let's start with inflation. There's been a lot of concern about that disinflationary trend maybe hitting a speed bump here. What type of, concern, if at all, are you hearing from clients?
Yeah, let's talk about that, because the setup for tomorrow is really, if you're an investor, I think you've got to take the good news as good news. You look at what we're coming off of last week, where we had the ISM poking above 50. We've got the Fed forecasting growth through 2026. And, the setup for tomorrow is really that all the focus is on inflation. And what we're most focused on is really how the Fed views inflation in the context of employment. We don't believe that the Fed needs to crush employment in order to move down that path of cutting rates. And that's going to be really important. What we should start to see is a path to 2.5% by the end of this year. That's our view. We think we're going to see that flow through with some of the shelter prices, which are a lagging indicator, really starting to make their way into the numbers. Tomorrow could be a little bit iffy because we've got oil obviously factoring in. That's going to boost CPI up a bit. But I think overall we see a path to 2.5%, and that's going to give the Fed room to follow through with some of those cuts.
Do you think the market is more concerned about inflation and the Fed, or are they more concerned about corporate fundamentals and what signals are going to come out of the next earnings season?
Look, I think it's a balance of the two. And as we look at the earnings picture, we actually see a fairly positive outlook. And this earnings season, which is going to really kick off at the end of this week with the banks, should be characterized by a real broadening out of the earnings picture, right? We had it very concentrated in tech. So you look at a Q1 that's seasonally stronger than Q4. We're expecting that this year, 9 of the 11 S&P sectors are going to post positive EPS gains. That's also the market consensus. We see that broadening out to all 11 sectors in 2025. We actually think that this quarter we could see on average 6% beat in terms of street expectations.
Wow, that's pretty positive. So does all of that, though, mean that we need to see inflation continuing to trend down so we continue to be in that Goldilocks scenario for earnings to make those kind of numbers?
I think what we're seeing is a resilient employment picture, but the employment picture is also cooling off. And I think that's flowing into profits. And I think the big story this year has been that improvement in corporate profit margins. We're going to see that, obviously play through in terms of earnings and valuations.
Okay, so what's the best allocation? What do you like right now?
Well, not surprisingly, we are slightly overweight equities in our strategic asset allocation, tactically overweight equities. We also, like sectors like healthcare that really didn't participate in the recovery in 2023, and specifically within healthcare areas like biotech and medical supplies, which, are really immune to a lot of the politics and policy. We also like global diversification. So a lot of investors, I think, naturally have a U.S. home bias. We've seen over the last 15 years, U.S. go from 50% to 70% of global market cap.
Yeah.
We don't think over the next 15 years that's going to trend to 90. So we think the cost of being globally diversified has improved materially. Bonds is another area in this interest rate environment where you've got to look at investment grade, including munis, and even in preferreds, very attractive for longer-term investors.
Well said. I do want to get your thoughts here. We only have a little bit of time left, but I want to talk a little bit about your business. And I know you can't get into any numbers as to what's going on in Citi overall here, but the business you're part of, this Citi Global Wealth at Work business, you guys been on a big expansion spree over the last 3 years or so. I know Jane Fraser has specifically cited this unit as being key to her goal of really building out that wealth management business.
Right.
I mean, how much has the uptake been now that you've kind of expanded the umbrella for the types of clients that this business is going after?
Look, it's really been extraordinary, Romain. I've been part of this business at Citi for 14 years. It actually has its roots going back almost 55 years dealing with successful global law firms and the lawyers who work there. But really this workplace wealth management model that serves highly successful, busy working professionals, we expanded a few years ago to cover industries such as management consulting, asset management, and other types of corporates. And so, we think that what we provide, which is really a high-touch private banking experience for busy working professionals, is something that, these employers are really looking to get behind and sponsor so that their people can focus on doing their jobs, being successful, and then eventually, leave the firm to do something else in life in great financial shape.
All right, Mike, great to have you on the program. I'm going to have to leave it there. Michael Remack over at Citi Global Wealth at Work, helping us kick off to the close here on this Tuesday afternoon. Coming up in just a bit, we're going to talk about Mazda, the company saying that it's an intentional follower approach to adopting EVs. It's perfectly timed to meet demand. A conversation up ahead with the president and CEO.
Yep, they were really talking about hybrids, and that paid off. So why one analyst says she is keeping an eye on the valuations of U.S. Steel and Cleveland-Cliffs, that's coming up in our top calls.
And we're going to count you down to the closing bells with Kara Murphy, Chief Investment Officer over at Kestra. All that and more coming up in just a bit. Don't go anywhere. This is The Close on Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. We do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
DOJ or other authorities
could face bigger challenges next.
It was going to keep Rain World Cup. This is a three.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
season is coming.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead just coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been?
Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
It all starts Friday on Bloomberg. Context changes everything.
All right, time now for Stock of the Hour. And today we're going to take a look at Moderna. So shares are rising today, the best performing stock within the S&P. After new data from a trial on cancer vaccines excited some analysts about its potential. Jefferies called these results, quote, interesting, which I guess in this speak is pretty good. Here with more is Bloomberg Health reporter Robert Langwith. He joins us now. Hey, Bob, walk us through these trials and what we learned.
So Moderna is testing the old term for it was a cancer vaccine. They're testing it in combination with partner Merck, in combination with immune therapy drug Keytruda. They're testing it for a lot of different cancers, and the lead use is melanoma. And there was some new data out this weekend, some preliminary data out the last few days on in head and neck cancer, the vaccine in head and neck cancer, which has caught some analysts' attention. Now, that's kind of preliminary data. The farthest along use is really melanoma, and that's in a large-scale trial right now going on with Merck. And with their partner Merck, they're also starting trials in other types of cancer, such as lung cancer. So this is kind of a very broad program that people knew about. But anyway, with this head and neck cancer data, despite being kind of very early, has caught some analysts' attention, some investors' attention today.
I'm curious, Bob, though. I mean, how serious should we take this? I feel like we've had a few other sort of moments in time with Moderna where we finally sort of saw what the future of this company can be beyond COVID here. Is this going to end up being a head fake, or is there real substance here?
This is just one very kind of early trial. It's a promising result, but it's a very early trial, very preliminary in head and neck cancer. And again, the bigger picture is that they're farther along with this very same product in combination with the Merck's drug for other types of cancer. And they really we really are waiting for the longer term results in trials in other types of cancer, such as melanoma, which is the farthest along one, in lung cancer. So this data today, frankly, is quite incremental. It's in a new type of cancer, but it's quite incremental and quite early. So in terms of getting approval for this type of cancer, that'd be a number of years off, and it's not the lead use for this cancer vaccine product.
In this space, though, Pfizer also made some news here. Its RSV shot apparently has now worked well in young adults as well as older people, so they could pursue and get U.S. approval. That would compete with Moderna's shot. This kind of sets them up for Moderna-Pfizer COVID vaccine, but now on the RSV front.
So Moderna's actually potentially number three to the market in RSV, because both Pfizer and Glaxo are already on the market for RSV. And Pfizer, what they're going to try to do is expand usage of their RSV shot to younger adults. So Moderna's not even on the market yet. They could get a decision next month for the RSV shot. That's obviously very important to them because it would be only their second approved mRNA product. So that's a very important upcoming decision for them. But then they're going to have to compete against two companies that are already on the market for RSV. So they're going to have a heavy competition there.
Have we heard anything at all, Robert, about potential pricing?
I don't know details on that. The companies usually don't announce the potential pricing of something before it is approved. So if Moderna's announced something on that front, I haven't heard about it.
All right, Bob, always great to talk to you. Bob Langworth, who helps cover healthcare for us here at Bloomberg. A closer look at shares of Moderna. Those shares higher by about 6% here on the day. Also moving higher as well, U.S. Steel. Wolf Research actually changing its tune on steel companies with an upgrade of U.S. Steel, a downgrade on Cleveland Cliffs. We're going to talk to the analyst behind the call in just a second. This is The Close on Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
All right, let's get a view from the sell side with our top calls, the big movers on the back of analyst recommendations. And we're going to start today with Lululemon. Piper Sandler dropping its price target down to $470 from $525. The analyst saying Lulu still a favorite among teenage girls, but only time will tell if that sticks, as teen shoppers are notoriously fickle. They also noted increasing competition from brands like Alo Yoga as well as Vuori. Still, the analysts standing by their overweight rating, though. Investors, at least for today, kind of bailing out. The shares down about 1% on the day. Next up, let's take a look at ChargePoint. Goldman Sachs pulling the plug on the maker of EV chargers with a downgrade to sell. The analyst Mark Delaney citing slower growth in the number of EVs on the road in the U.S. and rising competition for those charging slots. The price target cut to a street low, $1.50 a share. Those shares moving lower by 5% on the day. And finally, U.S. Steel, a bright spot here on the day with Wolf Research upgrading to outperform with a $46 price target. The analyst over there, Tim Tanner, says the stock looks relatively cheap on a standalone basis despite estimates to fall below the company's own forecast. She also says investors have overly excluded any chance of that Nippon Steel takeover, even though post-election could present an opportunity. Those shares higher by about 3% on the day, and those are some of our top calls. Now, we do want to stick with that last call there on U.S. Steel, which also included a cut in rating on Cleveland-Cliffs, citing the recent rally in those shares, which contrasted with earnings estimates. Here to talk about it a little bit more is Tim Tamners, equity research analyst at Wolf Research, covering metals and mining. All right, let's start off with U.S. Steel X, because I found this interesting. Is this just a valuation call? Is there a little bit more in this as to why you're optimistic around the shares?
I think it's a relatively interesting story. We're not really bullish on steel prices, but the move in U.S. Steel has been kind of surprising, considering that the company expects to make $2 billion this year, $3 billion next year. There's no way they're going to take a lowball bid, even if the Nippon deal doesn't go through, which we think is very possible. The company on a standalone basis looks interesting, especially relative to peers that have had a good run. And we think that, even on our below consensus estimates, mid-40s is easily achievable. And the company on a standalone basis with some of their growth projects actually could be pretty sticky here.
Hey, Timna, it's Alex. So good to see you. So you think that no deal with Nippon is going to happen?
We think the probability is more likely than not that there will not be a deal. If there is a deal, it would likely have to happen after the election. It's pretty unprecedented to have a sitting president oppose a transaction like this, but that's what's happened. And so to back off of that very clear stance seems to us unlikely. Biden wanted the union endorsement. He got it. Trump has also stood out as against this transaction. So that leaves the odds pretty difficult in our view, but again, it could sneak through perhaps after the election, if at all.
Gotcha. Okay, but either way, as a standalone company, it's still okay. Now, Cleveland-Cliffs, you also cut the recommendation on that company to underperform from peer perform. Opposite view there. How come?
Well, Cliffs has had a big run in the last couple of months of about 16%. And if you look at what's happening to earning estimates in that same period, they've retreated. And actually, if you look at steel prices, which we think should be relevant for this group, steel prices have pulled back substantially from some of the highs we saw earlier this year. So earnings power has retreated, and yet the stock has been quite strong.
we couldn't really find a good reason for it, and it seems to us like this relative difference in performance justified the moves today.
So when it comes to the M&A strategy, particularly when it comes to Cleveland Cliffs here, Tim, and you overlay that with some of the current concerns out there right now about the bid that's on the table for U.S. Steel, do you anticipate, at least, and this is specifically to Cleveland Cliffs, that they will continue with that M&A strategy, even though that strategy is a little bit more contained within the U.S.?
It's been pretty clear that they would like to continue to consolidate the U.S. industry. We think that they could do so, but we also think there'll be constraints with regard to antitrust that we were concerned about with their bid for U.S. Steel, is there would be an excess control over automotive sheet and appliance sheet, among many others. So they could look for some smaller acquisition targets. We spelled out some of those in some of our research, but I think that's something they could look at. Definitely, we'll see if there's other constraints out there from foreign and governments that they could pursue, or Russian entities, but it's something they could follow. Yes. Is there
at all? I mean, because we talk about this through the lens of some of the political issues going on between various countries, and whatever we're trying to protect here. Is there a sense here that when you look at these companies, and you look at really the industry as a whole here, are we just kind of destined for an industry that has to be more insular, has to be more domestic, or do you maybe see a break in the future where maybe we have a little bit more of a global footprint?
Well, the U.S. market is already some of the highest priced steel in the world, with the 25% tariffs on many countries that were put in place by President Trump a couple years ago. That makes the steel industry already quite protected. The U.S. steel industry is net short, needs to import. With some of the new capacity coming on, it could be more self-sufficient. But that said, it's going to be challenging to find a situation where the U.S. steel price can remain at a huge premium relative to the rest of the world. And I would argue that having a high-priced steel market does the country a disservice by making us less competitive with manufacturing and building and construction, et cetera. So I'd say yes, the industry is somewhat insulated and protected, but it can only go so far.
Yeah, I have to say, if you're looking for steel prices, and you want to just get a global view, it's impossible to get a clean read because it's hot rolled, it's something else, it's a different roll, and then it's all over globally at the same time. Which just brings me to the point of what is the real supply and demand picture, Timna, for steel? We need all the steel to build the things for the energy transition, but I have zero idea of what that supply profile looks like.
Sure. I mean, when we think about energy transition, people generally talk more about copper, but you need rebar for the foundation of some of these large projects, and that's positive for rebar makers. Most of the steel names we cover focus on sheet, and that goes more into auto and appliances and some construction, right? Construction is 50% of demand. Automotive is usually about 25% of demand. So that's really how it shakes out.
Do we ever get to a point, though, where it does become a strategic asset, if you will? We've spoken with so many executives on this program, particularly those in certain industries have talked about how hard it is to source steel as well as other sort of metals that they need to make things. And this idea that with some of the import restriction and export restrictions, that's going to make it even harder for them. When do we sort of cross that threshold?
I think what the U.S. needs is a competitive steel industry. I think there's some products that are kind of challenging to make, and I think that for the most part, what you need is various suppliers. You can't have just one. And in some of the more difficult products to make, we need to be expert. We need the expertise there for sure. But again, it needs to be competitive. We can't have a market that's completely isolated with price. And I think the industry is capable of being competitive, has the know-how, has the raw materials, has a good work ethic, and I think it's quite possible. But there's quite a bit of protectionism out there already, and I don't think that we need to see more concentration of protectionism to be competitive.
Hey, Timna, good to catch up. Thanks a lot. Timna Tanners over at Wolfe Research. Really appreciate your time. As we were just speaking, Romain Raphael Bostic is in a Yahoo Finance interview, and just something he said that I found interesting. He said that the CPI coming in at consensus would be a welcome development. Just don't go up. Yeah. You don't have to go down, just don't go up.
Yeah, I mean, but it's interesting, too, because, I mean, he talks about this idea how they really may need to delay further rate cuts, and this idea, too, that no matter what's going on with CPI, meaning the report tomorrow, the idea is that they've already seen a trend here. And when they go into that meeting, and I don't know how Jay Powell is going to sort of bully them into what he wants to do. He makes those calls before these meetings here. If Jay Powell is committed to making that cut in June here, I think he's going to have an uphill battle really selling at least people like Raphael Bostic and quite a few others others who really just don't think it's time.
Yeah, who talks about, Bostic also saying there's a slow pace of disinflation this year, right? So there is that. And also demand for service is still quite high. The way you kill that is with higher rates. So Go figure. All right, coming up, Mazda is looking to drive growth in the U.S. We have the president and CEO joining us next. That's coming up next on The Close. This is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg.
Just about 3:30 p.m. here in a very hot New York City. This is the countdown to the close. I'm Romaine Bostic.
And I'm Alex Steele. I know I haven't been outside, so is it warm?
It's 73 degrees outside. Alex.
Some say it's nice.
And you don't even need those little eclipse glasses.
I don't. My eye feels much better, by the way.
Yeah, don't stare in the sun.
Just in case we were a little worried about that.
Yeah, well, the market's still kind of middling today. I think everyone's still kind of in that holding pattern for the CPI report tomorrow.
And my question is, like, if that's not an upside or downside surprise, then what do we beat the drum to? Earnings. Okay, then we get JP Morgan on Friday. If that doesn't deliver something exciting, then what? Like, we're just pushing the can down the road for a big catalyst.
Yeah, well, there is a few things out there to talk about, a few things moving. Boeing not having a good day at all. We were expecting those delivery numbers for the first quarter, and we got them, and they were bad. The lowest going back to mid-2021, highlighting how far the company has to go on its road to recovery from those recent incidents with its planes. The shares just this hour falling even further after comments from a whistleblower about safety issues was published in the New York Times, Boeing pushing back on those accusations. All this sort of feeds into a lot of concern here, not just about the company, but really about the health of the supply chain and how that may be contributing to some of the issues going on out there. Joining us right now is Lisa Anderson. She's the president of LMA Consulting Group, which is really an expert in this space and what's going on with supply chains. And we do want to get your broader view, but I want to start, Lisa, first with Boeing and whether we know a lot of the issues going on with them are kind of self-inflicted, a lot of internal decisions. But we were kind of at this point where the supply chain issues from the pandemic seem to have sorted themselves out. Now we're dealing with this. How much of that is going to have an impact?
Well, it's definitely going to have an impact. You're right. The supply chain has largely recovered as of late last year. However, there have been widespread shortages and labor shortages up until now. And now with this change from Boeing and the issues that are trickling down the supply chain has been on aggressive growth of inventory to make sure that they can meet the projections. And now that the quality issues have come up, they're stuck with a lot of inventory and backpedaling.
It just sort of raises the question, sort of what's the demand part and what's the supply part in terms of what the issues are for, say, Boeing?
So the Boeing has significant demand out there from their customers, like United Airlines, American Airlines, those types of folks. However, since they've run into these issues with quality, they clearly are not able to supply enough aircraft to meet the demand. And the FAA has put restrictions on the demand, meaning how much they could produce, because they wanted to make sure they could produce quality products, which is of course critical. And so that same concept goes to their supply chain. So now their supply chain has inventory ready to fulfill the demand, because the demand was expected to increase over the next few years. However, the supply, the demand from Boeing now has been reduced because they're cut back because of the FAA's restrictions.
Right. So a little bit of both, basically, when it comes to Boeing. On a broader sense, right, I feel like we got our supply chains we're working it out, everything was going better, and then all of a sudden the Francis Key Bridge collapsed, and then that sort of disrupted supply chains again. If you were to rate where we are in supply chain issues, how are we doing in the U.S.?
Well, really good question. If we consider 1 to be really awful and 10 to be great, we largely work through the issues. However, it has, there's just so many disruptions continuing to come up. So I would say we're 4.
We're 4. That doesn't sound very good.
Yep.
All right.
No, but if you think about it, there was the bridge collapse, the Houthi rebels shooting or attacking container ships in the Suez Canal, and then the Panama Canal is experiencing drought conditions. Boeing, we just were talking about Boeing, so wherever you look, there seems to be challenges.
All right, Lisa, thanks a lot. We really appreciate that perspective. LMA Consulting Group President Lisa Anderson joining us there. Let's stay with supply chains, because some auto companies did have to rethink routes after the Francis Scott Key Bridge collapsed a few weeks ago. And that brings us to the subject of our next guest. Mazda is looking to expand its presence in the U.S. The company says the timing of its EV, quote, intentional follower strategy is paying off as demand for hybrid models now continued to rise. Here in studio with more is Masahiro Moro, President and CEO of Mazda. Moro-san, thank you for joining us. We really appreciate it.
Thanks for having me.
So let's just start where we left off on supply chains. Are you noticing any impact currently in the U.S. when it comes to bringing in vehicles because of the Baltimore Bridge collapse?
Yeah, at the moment, our operation team has been closely working with the Port of Baltimore and a concerned entity to find out points nearby for inbound vessels. And also we are working for alternative ports we have in the East Coast, Jacksonville, temporarily to minimize the delay of delivery to the customer. So that is the current outlook, and we're looking forward to come back to Port of Baltimore once the operation is back on track.
So that's dealing with the finished product, the delivery of those products. As far as making your cars here, are you dealing with any supply chain constraints, getting supplies and things?
We do have a supply chain issue globally. That is a few reasons behind it. One is the vessel shortages. During pandemic, vessel companies scrap the old vessels and they are reinvent to more LNG-based, better fuel efficiency and low CO2 vessels. That is one reason. The second reason is just mentioned, Suez Canal and the Panama Canal is unable to pass through. And the third reason is a significant increase in export from China mainland. Those are contributing to a significant challenge for logistics right now.
I am curious. I'm glad you brought up China. Most of what they're exporting, though, those are primarily EVs, or are they direct competitors to the models that Mazda is producing?
It is a combination between pure battery EV and the range extender and the internal combustion engine. It depends on the brand or Chinese brand.
What car do you think will sell the most, EVs, hybrids, or ICEs in the next, say, 5 years?
I believe still internal combustion engine has strong support from the consumers. And secondly, I see a great potential in hybrid. That is a perfect solution for customers. There is no anxiety for range. Right now, it's getting traction right now.
Well, we've seen that. I'm curious about with the internal combustion engines, because we have seen demand by consumers hold up, but the governments aren't necessarily on the same page. You have major initiatives in the U.S., in Europe, even in China, in order to reduce pollution and the carbon footprint, to get more people to buy electric vehicles or at least alternative fuel vehicles here. Do you not anticipate that those government efforts might push consumers into non-ICE vehicles?
Well, consumer gradually will be better educated, but at the moment, infrastructure and the battery costs and the price and affordability, many very high hurdle for customer to purchase. So it is going to be a slow adoption pace would be expected. Regulation is one side, the different side, we have to deal with that. But we focus on the consumer needs and wants and lifestyle.
Before we let you go, you're here, you're in the U.S. Are you looking to make an investment in the U.S., and would you wait until the presidential election's over to make that call?
We have a couple of alternative plans, but the final decision is after presidential election.
On purpose?
No, we need to see, it is going to be a big change would expected based upon past experience. I stayed in U.S., so it's a big swing.
So you don't feel comfortable making that investment until you have that visibility?
We do have a plan for the investment in the future, but how and timing to be, waited.
All right, Moro-san, we really appreciate you taking time for us on your trip here in the U.S. Masahiro Moro, he's the president and CEO of Mazda. All right, coming up here on The Close, the top takeover targets for the second quarter. These could be the potential big movers up ahead. We're going to let you in on the latest results from our survey here at Bloomberg. That's coming up next on The Close. This is Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Wow.
All right, Bloomberg has a new survey out. It talks to analysts, brokers, fund managers, and where they're placing their bets on where mergers and acquisition activity will happen this quarter. At the top of the list, Spirit Aerosystems, Avangrid, Macy's, some of the names that are actually being bandied about as likely takeover targets. And of course, a lot of people now moving around that, trying to position around some of those names. Yixin Shen is joining us right now, Bloomberg News equities reporter, to talk a little bit more about this. And let's start off with Spirit, because that's the obvious one that everybody wants to know about.
Yeah. Thank you. First, thanks for having me. So this is a survey based on 15 respondents I get from merger ops specialists, and I would say Spirit is the most obvious candidate for them. Is that we know the background that they're exploring options, evaluating bids, and they lots of ops think that Boeing is the most logic buyer because it is a business that got spin off from Boeing in 2005, and right now there are quality issues with both sides, both business. So there's an issue needs to be fixed very quickly. So a deal will likely happen there, but there's more a question about what will be the terms, what kind of premium the target could get.
Exactly, and sort of like what happens with the Airbus stuff and Spirit, it gets complicated. So that's a very idiosyncratic situation. So I'm wondering what they think about the deal flow so far, and then overall what the deal flow may look like.
Sure. Yeah. So let's say according to the survey, merger ops actually feel that the MA rebound so far this year is slower than they expected. If you look at the headline number, it's big, like 300 billion actually in the U.S. in first quarter. But if you look closer, a lot of the mega deals happened in January, like the Discover Capital One deal. But then that kind of mega deals kind of fizzle out, the momentum fizzle out into March. So the reason that the deal flow seems to be very front-loaded and spotty in a way that ops feel that we still need to see some, rate cuts or clear signal of that. Until that being cleared, only with that, certainty you will see the reopening of financing market or the return of LBOs, private equity transactions. That's the main part of MA deal making flow.
Yeah, still need those lower rates. All right, Yixin, thanks very much. Really appreciate it, Yixin Shen, joining us there. See, it all depends on those rate cuts, Romaine, and what happens if we don't get it. I mean, again, we were talking about Raphael Bostic talking to Yahoo Finance saying that, sure, if the job market rolls over, maybe we could bring forward their cuts, or we'd have to delay the cuts and push them even further out. It's sort of like two ends of a big spectrum.
I mean, that just seems like wishful thinking. Even if you get the cuts, what are you talking about? A percentage point? Is that really going to change the deal-making environment?
Maybe.
If you can't do the deal at 5 1/4, you're not going to do it at what, 4.75?
Maybe it's the clarity. Anyway, we're going to be counting you down to the closing bell with Kara Murphy joining us from Kestra Investment. This is Bloomberg.
order to move down rates, and that's going to be really important. What we should start to see is a path to 2.5% by the end of this year. That's our view. We think we're going to see that flow through with some of the shelter prices, which are a lagging indicator, really starting to make their way into the numbers. Tomorrow could be a little bit iffy because we've got oil obviously factoring in. That's going to boost CPI up a bit. But I think overall we see a path to 2.5%, and that's going to give the Fed room to follow through with some of those cuts.
And that was the head of investments over at Citi's Wealth at Work, helping us kick off to the close just about an hour ago. Here to help take us to those bells is the Chief Investment Officer at Kestra Investment Management, Kara Murphy, joining us here on the set in New York. Kara, does the world change tomorrow at 8:30?
Well, I think what we're going to look for is some confirmation that we're headed in the right direction. You know, if you remember last week, we were waiting for payrolls to tell us whether we had some weird seasonal adjustments and making numbers too high. So we didn't get that. And so now what Doves are going to hope for is for some softer CPI. But I think, honestly, what we're seeing in the market today is that the market is ready for a somewhat disappointing CPI number tomorrow, meaning a little bit higher than what the Fed would expect. And if it's okay, we can kind of move on. But for the Fed to really cut, they're going to need to see some more confirmation of deceleration.
Even if we do get a hot print, though, does that really change the game from an investment perspective? I mean, specifically when it comes to equities, because it seems like so much of what bid up stocks, I mean, obviously some of that was the rate cut expectations, but there was a lot more to it than just that, wasn't it?
Absolutely. If we look at corporate earnings, I mean, they've been remarkably strong. We look at GDP estimates. We went from an estimate this year of 1.2 growth to 2.1. I mean, almost a doubling in what we expected GDP growth. So they're very strong fundamental and underpinning. So
and I'm old enough to remember when 2.1, well, that was good.
Right, I know.
Like Pepperidge Farm remembers.
It's true. So I think we still have a lot of momentum in this economy, and if we're just pushing it out a couple of quarters, I think that's okay. There are going to be some areas of the market that are going to be more stung by that, but for the broad market, I think we're fine.
So how fully invested are you in equities, and what do you like?
We are actually overweight equities right now. Earlier this year, we downshifted out of mega caps into more mid caps, a little bit of small caps. So with the idea that we had a very, very concentrated market last year and that was going to start to broaden out, we've started to see some signs of that. We think that there's still a lot more to go.
Okay, but then you get the NFIB this morning that showed that sentiment was the weakest since 2012. They're worried about sales. They're still worried about inflation. So, like, what's your stomach like for small caps?
So I think small caps definitely have some headwinds ahead of them. We've seen large caps who have been able to grow corporate profit margins. Earnings have been really strong. A lot of small caps and small businesses, as reflected in the NFIB, have struggled a little bit more. They're also more rate sensitive. So this is not to say that small caps are done, right, and that they have an easier time ahead of them, but expectations have gotten so low for these smaller names that I think there's still a lot of opportunity, even if we don't see a huge reacceleration in their earnings growth.
I mean, some of the fear there is that, okay, these aren't the healthiest of companies, at least relative to the larger cap names that have these good balance sheets. And the fear was, okay, we were going to see, defaults and maybe even bankruptcies. That never materialized, but we have seen a little bit of an uptick in some sense of distress. Are you seeing that?
A little bit. So when we look at corporate bankruptcies, for instance, last year they were about on par with 2010. So the first time that we really started to see bankruptcies go up. But actually that decelerated in the latter part of the year. So that those smaller companies have been able to find a second win. So yes, there are headwinds, but they've been able to muddle through them.
Do you invest in corporate debt right now? And if so, is that investment grade or high yield?
So we prefer investment grade. We think there, again, you have the tailwind of stronger corporate earnings, stronger GDP growth. A lot of those companies are not very sort of reliant on short-term interest rates. On the high yield side, that's where you do have much more indebted companies. And then you also have very, very low spreads, so there's not a lot of room for error. So investment grade looks attractive.
So if you're going to dip your toe into value, do you need to sell growth and sell tech to do that, or you just need to sort of add?
Well, if you only have a limited number of dollars, then yes. And it's interesting, too, because if you look at just the core benchmarks today, just by nature of the tremendous outperformance of growth, you have huge overweights in mega caps and growth. So even if you started off a year ago with what you thought was a very core portfolio, you really leaned into that growth. So I do think you'd need to start to sell a little bit and come back into growth.
What about cyclicals? thinking like financials and energy, industrials, materials, that kind of stuff?
So we think that there are some opportunities. Energy is a really good example where you have valuations running at about half of your 10-year average, and you're starting to get a little bit of momentum in the underlying commodity. And with that stronger economic backdrop, you have growing demand. So we actually think that this energy rally has some legs. Financials are a little bit more difficult because the question is, how do we come out of this inverted rate environment? And that is one sector that tends to be fairly politically sensitive, where Democrats versus Republicans might have a very different view of regulatory environment, and so that could greatly impact those names as well.
Does the election, does it have an effect or any kind of chill on the investment decisions? I mean, we were speaking just a few minutes ago with the president and CEO of Mazda, kind of made it clear that from his perspective, corporate investing, that is, that they're kind of putting things on hold until they see the outcome of our election here. For investors in secondary markets, is that something they should be worried about?
I think for anyone with a diversified portfolio should not be worrying about elections. What we find is that in election years versus non-election years, the S&P 500 return tends to be the same. What is different is how you get there. Typically, those returns tend to be in the back half of the year, and you have a fair amount of volatility in like August, September. But it's really important to remember that markets tend to take off actually before the election happens, so you don't want to wait around for the actual event until you buy in.
And good point. Great insights. Kara, always great to talk to you and great to have you here in person in studio too. Kara Murphy over at Kestra Investment Management, helping us count down to those closing bells. Closing bells just about 2.5 minutes away. As we reset here with a market that had been in the red for a good portion of the day, now getting to bid here closer to the close. Most of the major indices right now in the green. The S&P right now unchanged. Romaine Bostic alongside Alex Steele. As we take you to the bell and beyond, Scarlet Fu joining us right now, as she always does at this time, here in Studio 2. Our radio colleagues, if you're wondering where they are, you know, Tim and Carol don't work a full 5-day week, so we have to give them their break here. But I think the trifecta you have here can walk us through. Scarlett, what have you been watching?
You know, I've been thinking about the CPI report tomorrow and whether it's going to be a game changer for equities. It feels like it's definitely the bond market is keying off of it, but what we've seen from the equity market is when there's data indicating the economy is strong, the market likes that because it feeds into the idea that earnings will be strong. And if the data is weak, well, then that's good too, because that means the Federal Reserve may actually have room to cut rates. So for equities, it seems like it's going to be good no matter what.
I'm actually looking at the 10-year tomorrow. We have an auction tomorrow at 1 o'clock, $39 billion. The 3-year today was a little bit soft, didn't go very well, despite the fact that there was buying kind of all across the curve. I think that could be kind of interesting, particularly after that CPI.
The bond market has actually been encouraging because you think about this sort of re-rating of Fed rate expectations and that. You would actually think that rates, that the bond rates would actually be higher than where they are right now. I mean, you still got a 10-year holding at 4.4, the 2 years at what, 4.7, 4.8 or something, 4.7 and 4 right now. And so you would think with all the hullabaloo around the disinflationary trend has been broken, I think it would be like over 5% by now.
Well, we have a lot of data points before the June FOMC meeting, and that's when, if the Fed does cut anytime soon, that'll be the meeting at which it happens. So this CPI report that's coming up is one of 3 data points that may or may not do anything.
Do you think Jay Powell can sell that, though? I mean, there's been so much talk about how he really wants to start in June. I mean, no one knows that for sure, but that's a scuttlebutt. But as we've heard from Raphael Bostic today and other Fed members, they're clearly in the camp of, let's just wait a little bit longer. So I wonder what that conversation is going to be like when we get to the days ahead of that June meeting.
Whatever the discussion, he's going to make it sound as boring as possible when he does talk to everyone about it.
No, really?
Yep, that's the goal. That is the goal. But guys, going back to CPI, do you get this? Do you see this cool note? 22V research shows that 53% of investors think that the reaction to tomorrow will be risk on. So I don't know what that tells us. I mean, 53%, okay. But like, does that mean that we're set up for disappointment, or does that mean it's going to be risk on no matter what, to Scarlett's point?
Well, I think everybody's really just on edge right now for that blowout number, the idea that it comes in really hot. So if you get a number that's in line or maybe a slight tick above, then at least it's like, okay, there's no reason to panic.
Move on.
But we're going to find out, of course, Team Surveillance will have full coverage of that, 8:30 a.m. Washington time. Meanwhile, here in New York, Team the close, 4 p.m., we get the closing bells. Dow Jones Industrial Average. It's going to finish the day. We're just going to call it unchanged, 38,883, down about 9 points on the day. The S&P 500 higher, a big flip-flop here. It had been in the red for a good portion of the day. It's going to close above that 5,200 level, up 8 points or about 0.1%. The NASDAQ up 0.3% on the day. And your relative outperformer, just by a smidge, that's going to go to the Russell 2000, a 7-point gain, or 0.3%.
Yeah, and if you look at the IMAP, that shows what the sectors breakdown looks like. It was a lot more mixed before. Plenty of green here. There's 11 sectors, only 2 in the red. Industrials and financials. Financials losing 0.5% before the big banks report earnings on Friday. Industrials down about 1/5%. In terms of the big gainers, real estate investment trusts gaining 1.3%. Utilities up 0.5%, along with consumer staples.
And right now, we want to walk you through some of the big gainers and decliners here on the day. Joining us right now is Bailey Lipschultz, who covers cross assets for us here at Bloomberg. Bailey, what are you watching?
Yeah, starting with the stocks that ended in the green, as we mentioned, the S&P eking out a gain. Moderna up more than 6% this coming after positive results from a drug study of their cancer vaccine in combination with Merck's Keytruda, showing some strong results, albeit very early, and head and neck cancer really showing that maybe they can be more than just a COVID play, and that really has been long the bull case for investors of the stock. Granted, it's still down about 70% from those all-time highs back in 2021. Also want to look at Lucid Group. Really not that much higher, but still ending the day in the green. This coming after first quarter deliveries and production matching expectations. There has been a lot of bearish sentiment around the EV space.
For Lucid, that's pretty good, I should point out, right? I mean, like matching is pretty good.
A match is a beat when you're down, what, 40% year to date, or in the last 12 months, 66% in the last 12 months, Alex? So again, though, 2.3%, nothing really gangbusters. So seeing some gains for the company that once was far larger, much like Moderna, 2 of those big pandemic winners, and NVIDIA. Scarlett, you mentioned it. Risk-off sentiment maybe a smidge ahead of the CPI day tomorrow. If we do see the market move higher, really NVIDIA has been the leader there. So that's one of the big things that we've seen maybe some investors taking some chips off the table. That was the biggest drag on the S&P 500 today. And one stock that was just within spitting distance of one of its worst close since December 2022. Boeing, worst close since October 2023. This coming after that whistleblower report. Whistleblower saying that the company took shortcuts to speed their 787 assembly, that they improperly fixed gaps in the fuselage parts, down more than 30% year to date. Not a good day, not a good year so far for Boeing.
It's kind of ugly on that front. Also, didn't Intel wind up, before I get deals, didn't Intel wind up unveiling a chip too? Could that be part of the NVIDIA thing, or are they kind of separate?
Yeah, NVIDIA was lower than before, was the big thing that we were looking at. It seemed more like an Intel story trying to get into the AI flavor.
Well, that's why, when I saw it, I was like, oh, something new. And then when you kind of dove into it, it was like, okay, this is sort of like, I feel like it's like the Elon Musk trick. It's like, when something goes wrong, just say robo-taxis and, everything's
And for
back
that
to
one
normal.
day, it's okay.
Yeah, absolutely.
And for every company that makes semiconductors or does anything that requires semiconductors, the winning thing to say is we're going to develop our own, or we're going to start looking at it ourselves because we don't want to be reliant on an external producer.
I've been told that developing those, it takes a lot of money.
And I was going to say, unless I spend a boatload of money, maybe like half a boat. Okay, I'm taking a look at the bond market. Like I mentioned earlier, all yields pretty much on offer here. You have the 2-year yield down by about 5 basis points, the 10-year yield down 6. As I've been talking about throughout the morning, is that the 3-year bond auction was kind of meh, didn't really do much. We get the 10-year tomorrow, we get the 30-year on Thursday as well. But again, what perplexes me, guys, is gold at a record high. Did you guys see that? Another record high today. Bank of America now sees $3,000 an ounce by 2025. Something doesn't square right with the move that we're seeing in the bond market and then gold.
I think that's been the kind of the story overall, cross-asset-wise. You look at what's happening with gold, you look at what's happening with oil, you pair that with what's happening in the bond market and in equities, and it kind of gets us to the big CPI report tomorrow here. I mean, we talk about what's the expectation, 0.3% on a month-to-month basis here. So that's not huge, but if we do get that, is it off to the races? And I don't know, Bailey, I mean, you've been keeping an eye on what's been going on in the market. Are people kind of primed for an upside surprise in this?
It seems that way, but the big focus still is on earnings season on Friday. So we do get a solid data point, all things considered, in trying to gauge where the Fed's next move is. But what's Jamie Dimon going to say on Friday? How is that going to help set the tone of earnings season? Because we are going into a critical point in time where markets are trading and kind of the ability for companies to deliver on these expectations, Scarlett.
And the estimates are fairly low for this first quarter batch of earnings, right? I believe it's something in the neighborhood of 3.9% EPS growth, which would be the slowest since 2021 or 2022. But the slowest in a couple of years. Of course, that happened heading into the last earnings season, and the numbers blew out those estimates. So perhaps the bar is low for a reason here.
Yes. maybe the bar is low for a reason. But weren't we talking yesterday that like the tech companies are supposed to deliver really good earnings growth now, but then 2025 is when it's like later on it's going to get really bad. So then you got to rotate and all that. But then Bailey, you cover all the IPOs and the meme stock craze. Like that part of the market doesn't necessarily tell you that we're phasing out here.
Well, the weird thing with covering meme stocks and, you know, the Trump medias, or even like people were wanting to call Reddit a meme stock, which I completely disagree with. The big thing is that I've seen on any given day, those stocks outperform. The market can be lagging, but you look at and talk to some of these fast money traders, they need to generate alpha. So if the market's selling off or it's a sleepy day, what better way than to use something like this closed-end fund DXYZ, Destiny Tech 100, was up 1,000% in 2 weeks, dropped 40% today, because it's an easy way to flip shares and try to generate some returns.
How much of the price action, though, can we really sort of take at face value? I mean, it seems like we've seen the volume lighter, even the churn is lighter, and there's been a lot of talk how a lot of the trades really aren't coming from the institutional side, at least not to the degree that we would expect them to come.
No, and I think that's the big question is who's buying?
Yeah.
And where does that come from? We've seen retail really step in, and we've seen whether it's hedge funds maybe just paring back some of these purchases, but there still is the whole argument about money market funds and that cash on the sidelines needing to be pulled in.
Cash on the sidelines.
Whether it happens or not.
Scarlett does not believe you on this, by the way.
Have you been to the sidelines, Scarlett? Have you seen this stuff?
We have
Alex?
stuff in the sidelines.
I've seen the wall of $6.6 trillion.
You've seen the wall?
Yes.
Okay, great.
It's
pretty formidable.
Can you just like pull something out there and throw it into the market for us?
That wall won't move. That's the problem.
But if we use that as like an indicator, like what you're assuming that money is money that belongs to stocks, right? But what if that's just money that's your savings that you're just not keeping in a bank? Right. You're not going to move that into stocks. You're going to keep it someplace where it's not doing anything, and then it makes money, and that sort of disrupts that whole thesis.
And people have gotten used to the idea that their money makes money just sitting there, and it's going to be hard to give that up.
I was so offended when Marcus sort of reduced its rate by 10 basis points.
I thought the same exact thing.
What?
I hated that email. It was like, by the way,
the Fed didn't cut rates.
It was just 10 basis points, but I was like so upset about it.
Yeah, I mean, it gets to the idea though too is like once we get their earnings and with the banks starting on Friday here, is that going to be a macro story or is it going to be something much more individual to the markets?
No, and I think that's why I think it's so interesting to see what the heads of big banks say, because they have the best line of sight into how the consumer is doing and what actually is happening under the surface. Yes, it's all fun and games to talk about what Nvidia is going to deliver and Apple will because they're juggernauts, but how is the consumer holding up? And that's really what I like to look for when we have Jamie Dimon and JP Morgan really kicking off earnings season.
You know what I want to know from Jamie Dimon is how long can he hold a plank?
Okay. Did you guys not see this New York Post article? 50-year-old woman, 5 kids, 12 grandkids, held a plank for 4 hours and 30 minutes plus.
Okay, to be fair, she practices this regularly. She planks for 3 hours at a time every day. She studies for her master's degree while she's doing this. She watches Netflix.
While she's doing the plank?
She's 58, has 5 kids. You know what repair that is to your core when you have to do that 5 times?
No, I hate this person. I don't know her, but I hate her.
No, I love her. I want to meet her.
All right,
You're my hero.
We're going to say goodbye to Bailey. Appreciate him jumping on here on the close. They'll break down everything happening in the markets here on the day as we push beyond into the next segment of the show here. Stick with us. A conversation coming up about the potential moves that we could see in the markets tomorrow. Jay Berry, JP Morgan's co-head of U8 Strategy, is on deck. This is The Close on Bloomberg.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
Let me just start with, this is not the first time we've heard this argument.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic, and I think I'm going to steal a phrase from Alex Seal about the markets today, Scarlett, and that's, it could have been worse. We actually opened higher for most of the major indices today, but for a good portion of the session, we were in the red, and this looked like one of those days where we were really going to hit the floor. But we saw a bid come into this market late in the day as a lot of people were really starting to position around that CPI report tomorrow. And S&P that closed out the day at that 5,200 level, and that really has been the line in the sand, only up fractionally. The Russell 2000 got a pretty decent bid, up about 0.3% on the day. But take a look at yields here. That could change in a big way tomorrow morning. 4.7 right now on your 2-year yield, and that could have an effect here on riskier assets as well, including in the crypto space like Bitcoin. A few big individual movers out there on the day, Scarlett, but not the names that we normally look to. Where are the Nvidias? Where are the Apples? Where are the Metas?
You know, they're not in the headlines today. We're paying attention to Cisco. This is one of the better performers in the Dow Industrials. And this is after Morgan Stanley resumed coverage of the internet gear maker with an overweight rating, saying that while there may not be a catalyst for a positive earnings revision in the next quarter or two, the stock is trading at or near a record discount to the S&P 500. So on valuation reasons alone, maybe it's time to bid up Cisco. The other name I'm paying attention to is Royal Caribbean, down about 3.7%, falling the most since early January of 2024. There's been a string of negative headlines. There was a passenger who jumped overboard on one of its ships, another passenger who went missing during a stop in Mexico. Certainly, this is not encouraging. And then the company refunding $1.3 million to passengers who had booked trips that were canceled because of COVID. So a lot of these negative headlines weighing on the stock, and we've seen a bit of weakness here. Now, our top story of this hour is one that we'll revisit throughout the show, and that is investors waiting for the big data point of this week. Tomorrow's release of the Consumer Price Index will play a key role in helping determine whether the Federal Reserve moves forward with a rate cut in June. The fear is that after 2 straight months of hotter than expected prints, the March CPI report will continue to be a thorn in the Fed's side. Romaine?
Yeah, and a lot of opinions really flying around about what that's going to mean for the Fed's rate path. State Street forecasting 150 basis points of easing this year. Yeah. And former St. Louis Fed President James Bullard, he's saying he only sees 3 rate cuts as the base case. Here in studio with us to give us his insights is Jay Berry. He's the co-head of U.S. rate strategy at J.P. Morgan. All right, Jay, you know, this has been the parlor game all year long as to how many rate cuts we get. I know no one really knows here. But when you look at some of the repositioning, if you will, that we've seen in the bond market, what is that telling you?
I think it tells you that the priors we had to start the year, Romaine, have been completely challenged. I think market participants came in this year saying that the disinflation we saw in the second half of last year was likely to continue. And when it didn't, it sort of challenged the notion at the start of the year that the Fed would not only be easing early and potentially in March, but often and more aggressively than other central banks. So I think more of your active investors who had been positioned for that to start the year have pared it back. And that's probably contributed to why we've repriced yields so much higher this year as we have.
Are you surprised that yields aren't higher than where they are right now?
Not necessarily. I think from a baseline perspective, we are looking for 3 cuts this year, beginning in July, actually. And markets are priced for about 2+ for this year. When we look at long-term yields through the lens of how the market is pricing Fed policy, inflation, and growth, it would actually seem to suggest to us that they're probably about 20 to 25 basis points too high. So as long as we're in an environment where we think the next move from the Fed is an ease, I don't think yields should be considerably higher than they are right now. But the big question here is, of course, what happens tomorrow and what happens with the growth outlook as well.
You mentioned you still see 3 rate cuts, which is what the Fed sees as well, except just starting later perhaps than what many people had thought. Is the election going to prove to be a sticky problem here in terms of timing and how the Fed moves with that?
Not from a primary perspective, Scarlett, but I think from a secondary or tertiary perspective it can. I think first and foremost, the path to easing is going to be dictated by what happens with inflation over the next few months. And we've heard from the chair a number of times that a strong labor market doesn't forestall rate cuts, but a weak labor market can bring them forward. So there's a lot more being priced into what happens tomorrow, and I think that will be the key sort of figure to watch. But if the pace of disinflation becomes more halting and we're considering rate cuts closer to the election itself, it's possible that it could play a role just from an optical perspective, because it's possible the Fed may not want to be seen lowering rates just before a decision like that. But I don't think it's the story for now.
Right. And speaking of disinflation, you've noted that we've seen medium-term inflation expectations rising, and that's kind of similar to what we saw last fall, except this time around it's being driven by broad increases in commodity prices, oil, gold, cocoa for that matter. Does that make the rise that we're seeing inflation expectations this year more or less pernicious?
I think less pernicious, to be quite honest, because last fall, long-term inflation expectations were rising. And, we like to think about 5-year inflation expectations as being the anchor, not just for nominal rates, but for monetary policy and its efficacy and its credibility. Now it's more of a short-term move. So long-term inflation expectations haven't moved up as aggressively, not becoming unanchored, and probably less of a concern for the Fed than they were long-term last fall.
Another area that we kind of came into this year concerned about, or at least talking about, was all the Treasury issuance that we were going to get and what type of impact that would have. We've had a few auctions this year. Some were a little sloppy, but overall they were taken okay here. How have you felt about the reception and what that may portend for future auctions going forward?
I mean, so far, I think the results have been pretty solid this year, Romaine, and in large part because if we think the next move is an ease, there's going to be support from bond funds, insurance companies, pension funds, hedge funds for treasuries. Last fall, it was a concern because markets were still considering the likelihood the Fed could tighten again, and there was this surge of long-duration issuance coming from the Treasury. Now we're at a point where, at least for the time being, auction sizes are stable. You think the next move is an ease, so that probably means auctions should be well absorbed outside of days like tomorrow in which we've got a 10-year auction just before the CPI report.
Is there any worry? And I know, look, we're the number one market, and we have been, and we'll probably continue to be for quite some time. But is there any concern about competition from other countries? The idea that Japan's finally starting to lift its rates. So now maybe that differential isn't as wide, and maybe that makes it a little bit more attractive for investors not to buy U.S.
I think it's a normalization because you've had normalization of policy elsewhere. And it means that the Treasury market is shifting from kind of price-insensitive hands like the Fed and foreign investors and banks to asset managers, pension funds, insurance companies, hedge funds. And maybe that requires more compensation. Maybe it requires a steeper curve. And it will kind of mean, all else equal, you need to have a bit more premium built in before you can buy U.S. fixed income. But we think it's going to be fine in the context of a Fed that's likely easing later this year.
One phrase we heard a lot last year was term premium, and you don't hear that popping up this time around as yields continue to rise. Why is that? And is that because fiscal sustainability questions are not an issue in an election year, but they will be in 2025?
Well, nothing's changed on the deficit front, right? We're still running a deficit that's a 6% share of GDP. I think what has changed is last fall, it was an open-ended series of increases to long-duration auction sizes from the Treasury at a time when we were still thinking about tightening that made it difficult to digest. Now, both of those are not at play if we think the next move's a cut, and for the time being, if Treasury is well positioned with respect to its auction schedule. So for the time being, I think the term premium story in the context of what Romaine asked about and the shift in investors is a slowly evolving story, not this sort of supercharged one that we had last fall when both of these things were working together at the same time.
Context is everything. It always is. All right, Jay, really appreciate your joining us today. Jay Barry is co-head of U.S. rate strategy over at J.P. Morgan. He still sees 3 rate cuts just starting a little bit later in July. Coming up, we've got the top 3, where we focus in on the top 3 movers and shakers at the center of the day's big stories. This is The Close on Bloomberg.
themes that move markets are on Bloomberg.
How worried are you about the U.S. election?
It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Season is coming.
I think we're all asking the same question.
Just how much earnings growth they're expecting.
Bloomberg is first to break the numbers.
Gilead just coming out right now.
We have Take-Two numbers.
Shares of Pinterest.
Lucid Group coming out with its earnings.
All eyes right now on NVIDIA.
A lot still to come.
With the smartest insights.
How much bigger could profit and revenue have been?
Better than what the street was expecting.
Bang in line with estimates.
We will have full and instant analysis.
It all starts Friday on Bloomberg. Context changes everything.
It is time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Richard Branson. The British billionaire's net worth has fallen by roughly half since mid-2022 to about $3 billion. And that's mainly a result of steep declines in shares of his companies that went public through those blank check companies, through SPACs.
Yeah, I mean, he devoted a lot of his cash to that, and at least at the time, it seemed like a pretty good deal for him. He rode that wave higher, but of course, we've seen that SPAC, the bloom has come off the SPAC rose here.
Absolutely.
And he's hurting, at which point, by hurting, he's still worth, like what, $3 or $4 billion or something?
Yeah, about $3 billion. So, but at his peak, his fortune was worth about almost $8 billion. So
okay, well,
it's a big drop off.
It's a big drop off. I don't know. It doesn't change his lifestyle.
Probably not.
I mean, that's one less space flight that he can take or something like that. That story really grabbed my attention. Another story that grabbed my attention, and we've had him on this program, Mark Smucker. He's the CEO of J.M. Smucker, and as his name would imply, he is a scion, of course, of the founding family. And he had an interview with Fortune where he talked a lot about what it took for him to rise to that job. Now, of course, the big takeaway from this and the big headline everybody is putting out there is Mark Smucker says he's no Nepo baby. And he goes on and on about, how he really had to vie for this job. And, if you get past the headline, there's an argument to be made that, yeah, he really did put in some work to get to where he is.
Sure.
Of course, we should also point out that I can't remember the last time someone not named Smucker hasn't run this company.
Yeah, no, he said he had to prove himself to earn a seat at the table, except, of course, it's totally different when your last name is the same as the name of the company, right?
Yeah.
I mean, he got in, and yes, he had to prove that he could make it to the top, but he got in.
Yeah,
that's the hard part.
Inevitability to it, right? Like the journey, you might have to, show that you have the chops, but at the end of the day, it wasn't like you weren't getting the job.
No, and he also said there are some rules to working at Smucker's, right? You have to have worked outside the company, get that outside experience. You also have to have a graduate degree. So check.
Check. And that's fine. He inherited the job from his uncle. His uncle inherited from...
He earned the job.
Earned the job, excuse me. So, he's obviously a capable CEO. I don't think anyone's going to take that away from him, but everyone focusing in on, I'm not a Nepo baby.
Yeah, well, Nepo baby is a fun phrase.
Yeah.
All right, the last person I'm watching is Martin Eberhard. He's the former CEO of Tesla. He tells Bloomberg it's a shame that Tesla may have abandoned its cheap car. He also weighed in on the broader EV market. Take a listen.
In the long run, what wins in the automotive space is a combination of quality and price. If you're driving for these two features, that's who wins. But I think it's important to understand that the automotive space is not like Silicon Valley in the sense that this is not a space where there's a winner-take-all technology, right? We can have a dozen different car companies around the world making a dozen different types of cars meeting the different positions in the market, all succeeding. It's not like with computer operating systems.
And to that end, he said Tesla giving up on a cheap car makes it harder for it to compete with low-end Chinese EV makers. And he says that seems like a better market than perhaps that gigantic truck that they currently make.
Yeah, and you should listen to him. He's not just the former CEO who actually founded this company. He was there before Elon Musk, and we should point out he was kind of forced out because he had a difference of opinion with Elon Musk at the time, and Musk got control over it and obviously took this company to great heights, but they had very different visions back then, and it's clear that even today they kind of had diverging visions as well. But it's actually good to hear from him. You know, we focus so much on Elon Musk, but we kind of forget there are a lot of other people in this EV ecosystem who have opinions as well, and you know, whether anyone will listen to him will remain to be seen.
Yeah, it must be tough to be Tesla's co-founder and former CEO.
Yeah, I mean, he made a decision to leave. I mean, it wasn't like, you know, he couldn't have stayed, but he clearly just couldn't work with Elon. And, you know, he's done well in his life. I don't really
think he's complaining.
For him.
Yeah. Well, in the last few minutes, we also learned that Jessica Alba is stepping down as the chief creative officer of the company that she helped co-found, which is The Honest Company. She's going to move on and do some other creative things, according to the statement. But this company stock, HNST is the ticker, is down in after-hours trading following Alba's announcement.
Yeah, and that company, I mean, the stock has been on the back foot for a while now. It's kind of interesting. I mean, I don't know. Does it matter? I mean, on one hand, yeah, she might have been the creative vision to get this thing started, but at the end of the day, you're supposed to kind of hand this off to the more seasoned executives and let them run things. So if this was set up properly, then maybe this could be a good thing. Who knows? Maybe she was the driving force behind everything. We're going to find out. I guess investors are concerned, and that's why it's down 3%. But we should point out it's a fraction of its IPO price.
That's a really good point.
Yeah.
Succession issues are always top of mind for all these founder-run companies. I'm not saying she ran it, but she certainly was the face of it for a very long time.
Oh, absolutely. And let's face it, I mean, we wouldn't have been talking about the Honest Company if it weren't Jessica Alba at the helm there.
Very well said.
All right. When we come back after the break, we're going to take a look back on this day in history. And Scarlett, we're going to take a look at the OG of meme stocks. I don't know if you're old enough to remember this. I felt old in the meeting pitching this today. The music CD subscription service, KTEL.
I'm old enough.
It tried and failed to adapt to the internet age, and that created one of the most spectacular rises and falls in stock market history. The question before we go to break, what was the best-selling KTEL CD of all time?
Ooh, a 90s band for sure.
This is Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but you know, it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down. Right, so it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, you know, movie-going begets movie-going, right? So when there's a season filled with, you know, good movies that people want to see, you know, I was made to feel pretty optimistic about what we saw in the summer.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that.
Don't miss Bloomberg's interview with the
All right, on this day back in 1998, the music service KTEL, best known for those disco compilation record and CDs that you saw advertised on late night TV back in the 70s and 80s, it said it was actually going to launch an online music service. In the span of about just a few days, the shares, which had languished at less than $4 each for years, became the ultimate meme stock of the day. It was fitting for a company that had actually made its name and fortune on marketing hype. Founded back in 1962 by a former door-to-door salesman named Phil Kuvis, KTEL started off hawking non-stick frying pans and kitchen gadgets such as the Veg-O-Matic. Loud commercials with the famous tagline like "Wait, there's more" were the backdrop for pushing dozens of products, many with questionable uses. There was the Patty Stacker, the Miracle Brush, the Bonsai Blade, the Pocket Fisherman. Most of those, though, KTEL didn't actually make. Instead, they were supplied by Ron Popeil. He eventually severed ties with Kivas and became his own pitchman, and that forced KTEL to consider other product lines. It struck gold after Kivas assembled the rights to thousands of outdated songs and put them on compilations albums, like Disco Mania, 20 great truck driving songs, and its most successful CD ever, the Hooked on Classic series, which was basically just the Royal Philharmonic Orchestra playing Bach, Beethoven, and Brahms to a disco backbeat. It was a wild success, but eventually it ran into a wall in the 1990s when consumers began gravitating to internet-based music services. KTEL's announcement on this day in 1998 that it would enter the online music space created a frenzy. The shares almost doubled in the first trading day after the announcement to $9 a share. Volume jumped to more than 55 times its daily average, and within 2 weeks, the stock was above $40. And just like that, meme stocks of the day, it was a trade that was driven mostly by retail investors. The average trade size at the time was around 500 shares. It was a phenomenal run for a stock that unfortunately wasn't supported by any comparable increase in revenue or profitability. Just 7 months after that initial stock pop, the bubble did burst, with the stock plunging 43% in 2 days after KTEL told investors it faced a delisting because its net tangible assets, only of about $450,000, were way too low. Executive departures and insider share sales only compounded the situation, and finally, by August of 2000, the shares had fallen from more than $40 a share to less than $2. The NASDAQ delisted the stock, and 7 months later, in March 2001, KTEL's primary business here in the U.S. filed to liquidate under bankruptcy protection. Now, the company still lives on as a closely held company, and it does have a big back catalog of at least 200,000 songs that generates revenue today, though much smaller, if you will, and the success of decades past is certainly no more. Scarlett?
I can even picture the commercials, and I used to sit there and watch through them, the whole thing, and, but wait, there's more. You know, that whole ethos was very much part of the business model there. All right, let's talk about business models and small businesses in particular, because optimism among small businesses dropped to a more than 11-year low, I should say, last month. That's according to the latest report from the NFIB. Bloomberg's Simone Foxman joins us now with more. So what did the survey indicate that small businesses were most concerned about?
Really volume of sales. So those talking about lower profit expectations, 29% said they were worried about weaker sales. Then beyond that, it was prices. The rise in materials costs, about 17% of those owners said that was part of it. Interestingly enough, to the extent that this is sales volume, though those business owners who did say they actually expect profits to rise, half of them said it was because of volume of sales. So the inflation story is here, and frankly, 25% of business owners said it's the single most important problem in their business. But you still got to get people into your store and doing business with you.
Has this affected their outlook on hiring?
Yeah, we got some data from NFIB as well last week. 11% expect to add workers in the next 3 months. That's the fourth decline in a row. But at the same time, 37% say they have jobs they can't fill. So this is playing in terms of input costs, right? But it's also playing in terms of how businesses can actually afford to hire people. If they have to pay people more, then that's a challenge.
Yeah.
They're really feeling the impacts of this unemployment rate at 3.8%.
The economists you've spoken to, I mean, what's been their reaction to this?
Well, we've had some of them here on Bloomberg TV. Mohamed El-Arian was on and talking about how inflation is sticky and shouldn't stop the Fed. We had Wells Fargo come out as well as economists there talking about how they believe that small business optimism is going to remain suppressed in part because of the stickiness. So I think when we look ahead to the inflation data that we're supposed to get tomorrow, even if we see a good reading, it doesn't mean that that's what people are actually feeling, business owners are actually feeling in the economy.
Yeah, absolutely. Simone Foxman, and you talk about all the economists we've spoken to on this program today. We have one more here on tap, and we saved the best for last. Sarah Wolf, senior U.S. economist at Morgan Stanley, joining us right now with all eyes on that inflation report tomorrow morning. Sarah, I mean, everyone seems to be on edge. I think we're going to get a really hot print here. What are you expecting?
It's a big inflation print tomorrow. The Fed needs to see a bit more data in order for them to cut in June. So if we get a hot CPI report, it definitely takes June possibly off the table. It's not the convincing data that they need to see. We have core CPI 0.25. Whatever we get for CPI, though, we do need to wait for PPI on Thursday because we get medical services, financial services, airfares. That gives us a full picture of what core PCE inflation is going to be for March, which is really the Fed's measure. Right now, we're looking for 0.22 for core PCE in March and in April, and that, to us, is enough good data for the Fed to cut in June.
So to what extent does CPI, PPI, and core PCE tell the same story when it comes to inflation?
So CPI, we get a decent chunk of what we're going to get for PCE, right? It's everything that consumers pay for. PPI is things that get paid for on behalf of consumers. So it's a smaller part, but medical services can carry quite a bit of weight for PCE. The one thing I will say is that shelter, that comes from CPI, and that's probably the biggest and most important component to look at right now for the Fed. Shelter inflation has been very sticky, and they want to see that come down. We're looking for that component to step down from about 0.46 to 0.4, so a little bit of progress. But we have to look in the details. Even if we get, a 0.2 on core CPI, but if there's a reacceleration in shelter inflation, that's actually not going to feel so good for the Fed.
So those are the components. I'm wondering what's driving it, because we've seen that the normalization of supply kinks has really helped drive the slowdown in inflation, brought us closer to that 2% target. But now, with evidence that the economy is doing just fine, demand accounts for the fact that inflation is no longer slowing, that demand impulse is pushing inflation, to stay at current levels, if not pick up a little bit more. Talk through that balance there.
So we've been focusing a lot on the supply side of the economy because we think that there's been a massive supply side shock in 2023, and that's going to carry into 2024, and it's coming through stronger population growth. We got about 3.3 million immigrants into the country in 2023. The numbers look like this year's also going to be strong, and off of that, more supply creates more demand. And what we've seen is if you look back into 2023, we had 3% real GDP, non-farm payrolls, 250,000 a month. The unemployment rate still moved up, which indicates that break-even payrolls were higher than 250,000 a month. And we had disinflation. So this just goes to show that, yes, we do have a lot more demand in the economy, and it's likely that potential GDP in the near term is higher than the 1.8% we keep talking about. But the Fed is going to be okay with strong demand as long as we continue to see labor supply come back.
I am curious on the labor supply, particularly when it comes to immigration. I've seen a lot of people talk about the gains that we've made in the labor market and how so much of that actually has been driven by immigration. Is that true?
It's incredibly true. So if we go back to 2022, we had about 1 million, net immigration of about 1 million into the country. That jumped up to 3.3 million. And so the CBO put out a bunch of estimates that we've checked ourselves, and it basically rose population growth by almost 80 basis points last year. Significant difference. And if you kind of back out a rule of thumb, when you have about a 1 percentage point increase in population growth, that could translate to anywhere between a 0.7 to a full 1 percentage point increase in potential GDP.
I ask that too because if we didn't have that, let's say the immigration policy was a little stricter as some people would have liked, what do you think the effect would have been on inflation, on wage pressures, all these things that we've been tearing our hair out over?
It's still really early days, but we've been doing some work looking at the disinflationary impact of immigration. And because the labor market has been so tight and immigration's been a critical part of labor supply coming back, and also creating more slack in the labor market, helping bring nominal wages down. It has played a role, we think, in the disinflationary process. So the Fed probably would have been more focused on bringing growth and payrolls down more significantly, creating more slack in order to reach their inflation outcomes. But now there's been a rethink of how strong the economy could be because of these supply-side dynamics.
How well understood is the effect of this increase in immigration on all of our economic data? Because companies are very reluctant to talk about this out loud for fear of political backlash. It's something that they just don't want to go touching at all or even go near. So we're not hearing from them any of the anecdotal, but it's clearly showing up in the data that is compiled officially.
I'll answer that as an economist and what we could see in the data. What we could see is if you look at the payroll report that we got on Friday, 303 non-farm payrolls, the unemployment rate moved down 3 basis points from 3.86 to 3.83. Participation was up, wages were down. What does that tell you? We can absorb a lot more jobs in the economy. It's not coming that much from the current population re-entering the labor force. So we know that. We know that it's coming from immigration in part because that's just what the data is showing us. You could track the immigration flows on a high-frequency basis. So our economy, Powell said it himself, it's bigger, but it's not necessarily tighter.
All right, well said. Sarah, really appreciate your joining us. Sarah Wolf of Morgan Stanley. And I bring up that point about how companies are fairly reluctant to talk about this. They don't want to be on the front lines in terms of saying one way or another how it helps their business or hurts their business in any way.
Yeah, it's a sensitive topic, as you know. But that's why I was like, when I kind of heard a couple of people talking about this, I never really looked at that data. And then when you look it up, it's like, oh, wow, this has really been a big driver. And I mean, it's been a benefit.
Yes.
And like I said, it's kind of aided, I think, to a lot of extent, what Jay Powell has been trying to do.
Yeah, but it's insofar as economists are talking about it, but companies themselves who are seeing the direct impact, they're not talking about it. And therefore, I wonder how much consumers really understand it as well.
No, yeah, they don't.
They don't. All right. Right now, we're looking at a market that managed to finish higher when it comes to the S&P 500, just marginally, up by 0.1%. We also saw buying in treasuries, pushing the yield down on the 10-year to 4.35%. Of course, there's still another big auction tomorrow. Gold futures continue to make record highs, 0.9% higher for gold.
Yeah, this is kind of the conundrum too, and I thought Bloomberg had a great piece a few days ago, just kind of about who's really buying, because we keep talking about it in the context, oh, this is the inflation trade, right, or the expectations on what the Fed may or may not do, and our reporters are basically saying, no, it's a lot more complicated than that. And then of course you have all the physical buying that China's doing, 17 straight months that they've been boosting their reserves for who knows what reasons. So.
There's going to be a lot to unpack there, especially because ETF flows into gold ETFs are definitely coming out. So
that's
how do you make sense of all of this, right?
Institutional buying.
Okay. This is The Close on Bloomberg.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal. The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Microsoft said to be investing almost $3 billion in data centers in Japan, according to the Nikkei. It comes ahead of a meeting between U.S. President Joe Biden and Japanese Prime Minister Kishida tomorrow. Joining us now from Washington is Bloomberg Balance and Power co-host Joe Matthew. And Joe, this kind of deal is what you'd expect to happen before a big summit between the leaders of two countries, and it's meant to kind of underscore the strength of the U.S.-Japanese relationship when it comes to business ties and investments, right?
Yeah. Well, that's absolutely right, and it follows Microsoft's meeting with Kishida here in Washington today. So that announcement, $2.9 billion, is the biggest investment Microsoft has made in Japan, and you're right. Kishida is encouraging investment in Japan as part of this visit to Washington. Is going to be sitting down with Joe Biden tomorrow. And, of course, they have an enormous amount in common, a lot of issues of overlap, but defense is going to be a major focus as they talk about strengthening our alliance, plans to create a council on defense industries that would allow the two countries to collaborate on military projects, including the Patriot 3 missile. This, of course, all in the face of a more aggressive China. As you see this come together here, that will include a shipyard agreement as well, allowing Japanese workers to do work on U.S. ships so they don't have to go back and forth, saving time and money, and also helping to alleviate a labor shortage in shipyards here in the U.S. It just brings us back to this constant refrain of a strengthened China, a more emboldened China in the South China Sea. They'll talk about how Japan might also support the AUKUS alliance, which it's not actually a member of, all part of this conversation here in Washington starting tomorrow.
So all eyes, of course, are going to be on the meeting between those two leaders tomorrow, Joe. I know you also have your eye on Congress. They were away. Unfortunately, they've come back. There's a pretty long agenda of things that they're supposed to get done here, Joe. What's up? What are they starting with?
Yeah, we said earlier lawmakers are back, and that's the problem. They don't seem to have a path, Romaine, on anything that is on their to-do list, which is pretty frustrating for leaders here. Speaker Mike Johnson has a motion to vacate hanging over his head. He could get fired if he brings Ukraine funding to the floor, for instance, and that's exactly what he plans to do. The question is when. Guys, they've been gone for 2 weeks. They're only back for 2 weeks, and then they're on recess again.
Wow,
and it's entirely likely that nothing will get done in that time.
Yeah, it must be nice. Is the Senate going to take up the TikTok bill? Because it went through the House pretty quickly, and we know President Biden made clear what his stance on this is, and then it kind of just died on the Senate floor.
We're asking that same question too, Scarlett. It's a great question. Lobbyists are spending an enormous amount of money to keep this from happening. And the fact of the matter is, you see one of these situations with strange bedfellows where progressive Democrats and conservative Republicans both have a problem with this as a First Amendment issue and focusing specifically on one company, whether there's a fairness issue to be addressed here with the length of time that they're being given to actually get rid of TikTok for ByteDance to actually strip this off. Look, we can't even figure out how to fund the government here most of the time. So whether we can figure out how to get reins around TikTok remains an open question.
All right, Joe, always great to catch up with you. Stick around. Joe Matthew and Kaylee Lyons, they're coming up right after this program on Balance of Power. Greg Murphy, Kersa Hutchinson, and a few other good guests there going to walk you through everything going on in Washington, the White House, and Congress. Meanwhile, right here on The Close, we are not done. We're actually going to set you up for what to watch over the next 24 hours. This is Bloomberg.
Now, women on average have about a 30% lower, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving them the tools that they need to get back on track.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big. With $1 trillion of assets almost, we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Scarlett, everyone keeps talking about the start of earnings season on Friday with the big banks, but it actually kicks off tomorrow. We're expected to get earnings out of Delta Airlines in the morning. Joining us for a preview is George Ferguson, our senior airline analyst over at Bloomberg Intelligence. And a lot of people are really focused right now on the travel sector, particularly the airlines. What's going to be the big story out of Delta tomorrow?
Tomorrow, we're going to look very closely at yields, right? Yields are synonymous with fares. We're going to try to figure out if yields are softening or not. This is first Q2, so we should remember that first Q is always a seasonally weak season. We think that a lot more of the airlines business has become leisure as business is recovering. We'll watch what the business recovery looks like, but because it's so leisure driven, we expect 2Q and 3Q to be the best part of their earnings season anyways. But we want to see how fares fare against last year's 1Q. We want to see, again, is business back? What's been real strength for Delta has been international, as well as the front of the airplane leisure, right? So, high-end leisure, we'll want to see how those two are doing. We think that basic fares are doing poorly. We think that we have to compete with Spirit, Frontier, and those kind of airlines. That's the softest part of the business, and so we'll look for commentary on that as well to figure out if that budget traveler has got a lot more options getting better fares.
And what Delta is seeing in terms of demand for the busy travel season that's coming up as well. Does Delta face any Boeing issues, or is it an Airbus?
Delta's largely an Airbus shop, so I would expect them to gain from carriers that are having Boeing problems.
Okay, got it.
And when it comes to also, we get to this idea of leisure travel here. What about that bounce back in corporate travel? I was always under the impression for these airlines that was kind of a cash cow, or at least a higher margin. Is that still not the case? Has that come back to pre-pandemic levels?
So it hasn't fully come back. I think what we heard during 4Q was we were around 90% back. So, we're going to look to see if that gap is closed. But
90%,
right.
That's pretty good, right?
You'd think so, right? But I guess that 10% lack, like you said, they're really nice price points on business travelers, for their fares, and so it hurts. They've supplemented it with high-end leisure, but high-end leisure doesn't typically come in at the same price point. So again, we'd love to see business coming back. That would do more to balance out the earnings throughout the year.
Yeah, those are all the people who are saying, you know what, I'd rather Zoom than jet over somewhere, meet for an hour, and then jet back. back.
I think so.
What about fuel? Because jet fuel prices have been rising because of rising oil prices overall.
Yep.
What has been Delta's strategy thus far when fuel prices jump suddenly?
So Delta doesn't hedge, but Delta owns a refinery, and the refinery helps them with the crack margin, right? The difference between base crude and the refined product. But for first Q, actually, fuel was pretty well contained. We're seeing it rise now. It's more of a worry in second Q and third Q if this continues. What we'll also see in 1Q, the bigger problem will be the pilots. The pilots, they had 20+% pay increases last year. That's going to put a big dent in margins for 1Q. We expect margins to be below the year prior or close in 1Q of this year.
And just final quick question here. Are there any other sort of outstanding union issues that we need to be focusing on?
There always seem to be union issues inside this business, but the big one, the pilots are out of the way. But there's always mechanics and other parts of the business that get increases, but nowhere near the size of the pilots. So I think it's largely behind them.
All right, George Ferguson there, the best of Bloomberg Intelligence. A really nice preview, Scarlett, for those earnings. Actually, the only big earnings that we get tomorrow, Delta, but that is going to be the kickoff to the earnings season tomorrow. We will have full coverage of that on Team Surveillance, but there's quite a few other things that we also have to keep an eye on, including overnight here over in New Zealand. We're expecting to get a rate decision out of the Reserve Bank there.
Yeah, the New Zealand Central Bank. They were the first one to target 2% inflation.
Yeah, I mean,
blame them.
Blame New Zealand, not Canada.
But Bank of Canada also coming out with its rate decision, so blame them both.
That's all. And then, of course, we're going to go over to Asia because South Korea, we have some elections going on.
So some critical elections. We'll be monitoring all that along with the trade in the won and the Korean Kospi, and we'll keep you posted on all those developments there.
Yeah, so this is actually a big international focus, and you wonder how this is going to bleed into the U.S. markets. We were talking about this a little bit earlier. The Japanese Prime Minister and President Biden meeting at the White House tomorrow.
Yeah, and they're going to stress all the economic cooperation that exists between the two countries. One thing that they may not bring up that's kind of going to hang over them is what happens with Nippon Steel.
Yeah.
Right, and its bid for U.S. Steel. And
well, they'll talk about it.
Well, they won't. It won't be part of the readout necessarily.
But they're not. Yeah, they're not going to tell us what they said here. But that's a good point, and it gets to this whole idea of how do you sort of create an allyship there or strengthen that allyship at a time where you're still kind of doing protectionist policies.
Yeah.
All right, and then that brings us back to Washington here. I thought Congress had other things to do, but apparently they're actually going to move forward with this impeachment process for Mayorkas.
You know what? Maybe this is something that they can get done over the course of 2 weeks because they're only back in office for 2 weeks before they're off again for recess.
So
as
not
Joe Matthew told us.
Ukraine, not budget deals, not
That's
TikTok.
too complicated.
Okay, not too complicated. And of course, we bring you back to the markets here. And of course, in addition to the CPI data in the morning, we get those FOMC minutes at 2 p.m. Eastern Time. We'll be back then. This is The Close on Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world, and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars. has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities
could face bigger challenges next.
It was going to keep rain World Cup. This is a three.
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Joe Matthew, I'm Kaylee Lyons.
Congress returns to Washington with a long to-do list and a motion to vacate hanging over the head of the House Speaker. We'll be joined ahead by Republican Congressman Greg Murphy of North Carolina.
A key question for him and his colleagues, the path forward for aid for Ukraine and other U.S. allies. We'll have more on the stakes around that debate with former ambassador to NATO, Kay Bailey Hutchison.
And Arizona's Supreme Court rules a Civil War-era law criminalizing nearly all abortions can take effect, with potentially massive political consequences for a crucial swing state in the 2024 election. Kaylee, the timing of that ruling today, just a day after we heard from former President Donald Trump, his announcement on abortion, his policy is leave it up to the states.
Yep.
Tacitly almost endorsing what happened today in Arizona, and it's one we're going to hear a lot about.
Yeah, absolutely. This is an 1864 piece of legislation that the court has said can go into effect. And you're absolutely right. Donald Trump yesterday, while declining to endorse any kind of ban at the federal level, did say it should be up to the will of the people and the will of the states. And we've gotten a lot of reaction out of the state of Arizona, including one of its Democratic senators, Senator Kelly, earlier today. This was his response.
This law may have been written 160 years ago, but it's only being reinstated now because of politicians who worked to overturn Roe v. Wade. In fact, in the Supreme Court ruling today, it mentioned the Dobbs decision 22 times.
We bring in now Bloomberg senior Washington editor Wendy Benjamin. Wendy, it's great to see you. The timing here is really remarkable with regard to the campaign trail. It's not only a day after Donald Trump made the announcement that I referenced already, but it comes after abortion has turned in the favor of Democrats time and again at the ballot with, just a little over a half year left. This could play in favor of Democrats in an important swing state again.
Absolutely. And ironically, it's an issue that President Joe Biden feels sort of uncomfortable with. The statement from their campaign came from Vice President Kamala Harris. And yet, it is one of the things that could tip a close race over to him. And remember, he only carried Arizona by a few thousand votes, I believe. It was very, very close. But he carried it last time. And if they are successful in putting a ballot measure on the ballot in November in Arizona, codifying abortion rights, you will get massive Democratic turnout, and in a state that he carried barely before, and that could flip that very important swing state, even though it is ground zero for the immigration debate.
Well, and of course, the immigration debate is still raging in addition to the debate over reproductive rights. But on immigration, that, of course, was the real focus of the House impeachment of the Department of Homeland Security Secretary Alejandro Mayorkas that happened earlier this year. Those articles were set to go to the Senate tomorrow, and that has now been delayed. We heard from Republican Senator John Thune of South Dakota on this entire effort on the Senate floor earlier today.
The House of Representatives has put forward serious charges along with evidence to support those charges. And it's not too much to ask that the Senate take this matter seriously and explore these charges before dismissing them. The Senate should have a full trial and take the time to examine whether Secretary Mayorkas's actions warrant a conviction. Then the Senate should be able to vote guilty or not guilty.
And Wendy, we did get a statement from a spokesperson for the House Speaker, Mike Johnson, that said to ensure the Senate has adequate time to perform its constitutional duty, the House will transmit the articles of impeachment to the Senate next week. The thing about it, though, is delivering it next week rather than this week isn't going to change the ultimate outcome of this thing dying on arrival, right?
Absolutely. I'm afraid Senator Thune is in for a bit of a disappointment here. The chances of a Democratic-led Senate convicting a member of the president's cabinet for any of the things they've accused him of, which are basically carrying out the policies that he could carry out, whether you agree with those or not. It wasn't a high crime or misdemeanor, not really impeachable, and the Senate is going to dismiss those as quickly as possible.
Just considering the optics of Alejandro Mayorkas on Capitol Hill this week to make the case for Joe Biden's DHS budget while this is happening says a lot about where we are, never mind the sort of lack of direction we're still facing here when it comes to funding for Ukraine. Secretary of Defense Lloyd Austin talked about the need to help Ukraine in his testimony on the Hill this morning. Here's his take.
Putin is betting that the United States will falter and abandon our friends and leave Ukraine in mortal danger. If the Kremlin prevails in Ukraine, it would embolden would-be aggressors around the globe. The United States would be far less secure if Putin got his way in Ukraine. And President Biden has warned that Putin will not stop at Ukraine. If America walked away, we would put the free world in peril and risk unimaginable cost and dangers.
Lloyd Austin isn't the only one making the case. Mike Pompeo is also doing the same for Republicans in the House. Are we in a moment of fluidity here where this might actually happen? I know the line is it's going to be weeks, but I feel like we're getting closer to actual legislation than we've been in a while.
I think we might be. I mean, it will take weeks. It always takes weeks with Congress. But I do think there's becoming a few more increasingly isolated members who are dead set against Ukraine aid. I think that not only most of the Democrats, most or if not all of the Democrats, and a great number of Republicans believe in Ukraine aid because of the very things that Lloyd Austin was saying. It emboldens Putin. It emboldens China. It emboldens other countries to just go marching around taking what land they want. And that's not something that the U.S. can stand by and watch.
Yeah.
All right, Bloomberg's Wendy Benjaminson, thank you so much. Of course, as we focus on the issues surrounding one U.S. ally, we turn to another ally. As President Biden welcomes Japan's prime minister to the White House today as the two countries look to strengthen their ties while the tension of the planned takeover of U.S. Steel by Japanese Nippon Steel simmers in the background. Here's Pennsylvania Senator John Fetterman late last year when that deal was announced.
I'm standing on the roof of my home right here in Braddock, Pennsylvania, right across the street from the Edgar Thompson plant. And I just have to say it's absolutely outrageous that they have sold themselves to a foreign nation and a company. Can't do that.
Bloomberg's Josh Wingrove is with us now. He has a new big take story out that is just published on the terminal and online. And the headline says it all, Josh. Japan's U.S. Steel takeover creates election year firestorm. The thing is, Japan is a U.S. ally. This is not an adversary, which just speaks to how unusual this whole thing is and the politics around it.
Yeah, absolutely. I mean, they just, it's not clear that they realized the mess that they were walking into with this bid. This story kind of sweeps together everything we've learned so far. The long and short of it, though, is I think some people might be prematurely thinking this thing is totally dead after Biden came out against it. This is a deal announced in December, $55 a share, quite a premium. So a lot of people were excited about it. But Senator Fetterman, followed by one of Biden's aides, Senator Casey as well from Pennsylvania, Senator Brown from Ohio, really came out against this, and that's because of the steel workers and the union jobs associated with them and the political clout of the steel workers. So the question has been, okay, well, what can change now? What will happen? Our reporting is that the problem facing this whole consideration right now is that every other option has problems. There's a reason U.S. Steel was doing a strategic review of itself, so there are some concerns as to if it remains independent, what the future will be both for the company and its union workers. talk has turned to other companies that might buy it, but those have antitrust concerns that our sources have pointed to, and the auto sector, for one, has sort of warned against that, saying we don't want all the eggs of steel making in one basket domestically. So it's a good story. I hope everyone reads, everything we write, etc. But my colleague Joe Doe went to Pittsburgh, talked with both steel workers and just members of the community. It's hard to throw a stone in Pittsburgh and not hit someone whose grandfather or uncle or whoever worked for U.S. Steel or one of the many companies tied to it. And the focus there really is on jobs. And so what we're hearing is that there is a path for Nippon Steel here. The meetings so far with the union have not gone well. One that we recall had about 8 minutes of silence while they sat there reading an offer that they did not like, and it ended shortly after. This will all be in the background of this visit. But right now, the question for Nippon Steel is not, hey, Joe Biden is against this, you should pick up your toys and go home. It's more like all signs from opponents, some of whom have stepped back a bit off the ledge in their fervor against this deal, are that if the workers are on board, that's more important than the foreign ownership question, although other critics will tell you these are inextricably linked because foreign owners weaken bargaining powers, that kind of thing. So this deal is really swirling in the air. The invitation for Prime Minister Kishida came after the furor, whether erupted over all this. Whether it caused it is an open question right now. But I think
correlation, causation.
Right, exactly.
Well, so you've got both leaders in a room.
Yeah.
They're talking about strengthening our military alliance, U.S. investment in tech in Japan, the big announcement by Microsoft. Why isn't this on the agenda?
By design. They're talking about anything but steel. This is the elephant in the room, and they want to talk about the room. And so we'll see them talk about all that. They've got some announcements so far. Prime Minister Kishida later this week will speak to Congress, befitting sort of their status as an ally. They're rolling out the red carpet for him to tamp down some of the criticism. Interestingly, though, Kishida has really distanced himself from this controversy. If you read between the lines, one possibility is that he thinks Nippon Steel might have stepped in it a little bit, and he doesn't want any part of this mess. But needless to say, he's saying that this is a private company matter. Don't talk to me about it so much. So we're going to see the two leaders really downplay it. They'll almost surely get asked about it tomorrow. And so as traders are really watching this, right now it's at 25% below the offer price. So if you think this deal is going through, there's money to be made. But of course, this deal might not go through. No one knows what to think. They'll probably be asked about it tomorrow at the press conference. We'll be watching it closely. But our base expectation right now is that the CFIUS review will stretch past, for months, possibly, probably likely past the election, and that after that, we don't know. Another thing in our reporting is that there's some dispute over whether the U.S. government even can kill this deal if it wanted to. Joe Biden opposes it, but has stopped short of saying he wants to kill it.
That's right. There's your primer for tomorrow. Josh Wingrove, many thanks for being with us on Balance of Power. Coming up, we'll be joined by Republican Congressman Greg Murphy of North Carolina. It's next on Balance of Power on Bloomberg TV and radio.
I'm Alex Rodriguez. I'm a former New York Yankee and played professional baseball for over 20 years. Almost that entire time, I was thinking about business.
And I'm Jason Kelly. I've been a business journalist at Bloomberg for more than 2 decades. And across my career, I've covered everything from the Olympics to Wall Street.
From Bloomberg, this is The Deal. Each week, you'll hear us in conversation with business icons.
This show will explore deal-making across sports, media, and entertainment.
This is very fancy for a podcast.
If I knew what it was going to be, I'd have put everything I had into it.
I get asked more about our relationship than I do my wife. You know what I'm saying?
This is a show where we talk with big-time athletes and executives about the wins, the losses, and lessons learned along the way.
This show is called The Deal.
The Deal?
The Deal.
The Deal.
That deal.
The Deal.
Huge deal.
Who dug this up? What are y'all in trouble?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The Speaker has a responsibility to bring the best possible packages to the floor in the interest of the country, in the interest of our allies. We have a responsibility to step up and vote on that. Farm bills always are bipartisan. NDAAs are always bipartisan. The appropriation bills in normal times are always bipartisan. We just have to let the body work its will. I have faith in the body.
Normal times. That was Republican Congressman Frank Lucas of Oklahoma on the early edition of Balance of Power today, speaking with Kaylee and I about Speaker Mike Johnson facing a motion to vacate and a very long to-do list. As members of the House return to town today, we're joined by one of them. Republican Congressman Greg Murphy of North Carolina is with us at the table. It's great to see you. Sir, thanks for coming back to join us at Bloomberg.
Nice to see you.
Boy, you've got a lot of work to do, and of course, as always, not a lot of time to do it. You're back for 2 weeks.
Yeah.
The first order of business, we're told, is an extension of the FISA program. Can Republicans come together on a single bill to renew FISA?
I think we can. I think there's been some negotiations between judiciary and the intelligence community on trying to heal some of the differences. I think there'll still be some folks on either side that may not like it. But you know what? When you pass something, when you have both sides don't like it a little bit, maybe it's the right spot in the middle. We have to protect our country from those who are nefarious, that would do things to this country. But we also have an obligation for the Fourth Amendment to protect our nation's rights and citizens' rights.
Well, on the subject of protecting the country, proponents of Ukraine aid say that essentially by supporting Ukraine, you are also acting in the interest of the United States to make sure that American troops never have to go on the ground should Russia, if they can be victorious in Ukraine, move toward a NATO ally. And yet, still very unclear what, if any, is the path forward for Ukraine aid in your body. What form do you expect it to take? What form would it need to be in to secure your vote?
Well, I think personally, and point blank, I think we need to support Ukraine. In my opinion, Ukraine never needed to happen, and it was a result of what we did in Afghanistan. But here we are with the crisis, and it's where East meets West. You've seen now Russia and China agreeing and working, cooperating on unprecedented levels. And while we're fighting essentially a proxy war with Russia, we're also doing it with China. And now the axis of evil, as President Reagan said, are aligning very, very much. We have to show strong support for democracies, and we have to do that with Ukraine.
Is the Speaker going to get fired if he goes through with this? You don't need me to tell you about the motion to vacate. You've already lived through this experience. And some folks say, you know what, Republicans don't have the stomach to go through it again. It's not even a real threat. That the gentlewoman from Georgia is, in fact, just raising money on this.
No, I think it's a real. I'm sorry, Joe. I do think it's a real threat. But sadly enough, when Matt Gaetz had his personal issue with Speaker McCarthy, he brought down a great part of what happened with the Republican Party. We don't need this nonsense. We don't need rogues. We don't need individuals screaming on the House floor that Republicans aren't doing enough. We need folks that actually think not just one step ahead, not two, but 3 and 4 steps ahead. What's the best way we can get most of Republican priorities put forth? You don't get everything 100% in this world. Some folks just need to realize that you can't get everything with one big bite. We don't have supermajorities in the House, Senate, and the White House. We need to do what we can when we can, and that time is right now.
Well, you allude to the former Speaker, former member, frankly, Kevin McCarthy. There were 8 Republicans who joined Democrats in voting to oust him. Right now, the only real vocal Republican on this issue is Marjorie Taylor Greene, and Congressman Lucas, who we just heard from, said he is only aware of that one. Do you think the votes would even be there if she moves forward with this?
Well, again, we're in a very slim majority right now. I think I forget the numbers are 2s right now. But also, I think Democrats are tired of this nonsense, too. I think the whole body...
So you expect them to step up to protect it?
Well, I don't know that would happen, but I think the whole body is tired of this nonsense. I'm tired of showboats in Congress that see this as their platform for personality. I think we're here elected by the people to do the work of the people. Yeah, we're going to have our disagreements. But you know what? I came here, I got one vote. They have one vote too. It doesn't mean they need to take down the majority in doing so.
You can see how fed up you are.
Absolutely, to the teeth. And it takes a lot. I'm a surgeon. I have a patience that I've learned through the years, but now I'm just kind of...
Doesn't mean you're not keeping a steady hand. Kayleigh mentioned Ukraine.
Yeah.
Is this going to come to the floor attached to Israel and Taiwan, as we saw in the Senate, or is this a one-by-one approach? We spoke, again, with Congressman Lucas earlier. He said they should even put the Baltimore Bridge funding on this, put it all together and up for a vote. What do you think?
I don't know if that's a smart approach. I'm not the speaker, and I wouldn't dare speak for him. But I think putting things